that actually accelerates.
So to that point, however, if DeepSeek won't be applied to corporate, et cetera, okay, fine. But then what is the hurdle rate then seems low for a U.S. company to do something like this going forward? What are the chances?
No, I think, so in this world of software, once you figure out one company is doing it one way, it is not that hard for others to follow if you figure out what the concepts behind that are. And I think that's what we will hear. The next 2 weeks is very busy for earnings for all the large tech companies. And I can bet you this is going to be the first question for almost each one of them. And they will come back and say, well, if this is a new way of building a particular software, I think the US company should be able to do exactly the same thing. So and again, this is an open source company. It has published a lot of its research publicly, so it does have an impact on you could say, the progress or the R&D of other large language model providers.
So I guess the stock market's telling us today the losers here are the chip makers, because if they were counting on all this CapEx spending coming their way to their revenue line, maybe not so much. Is that what we're seeing?
Yeah, that's what I'm also reading from this thing. But again, we'll have to hear from NVIDIA and the others in terms of what their pipeline is, what kind of work they are seeing, and why their chips are still important. And I think that really is the onus is now on these companies to go out and explain to the street why people will still go out and buy their products and not just depend on, the non-specialized chips that these guys are selling.
All right, Anurag, thanks so much for joining us. Really appreciate having access to you today and to Mandeep Singh of Bloomberg Intelligence as we all get up to speed on this DeepSeek news story. Let's take it one step further. Gene Munster, managing partner and co-founder for Loop Ventures, really one of the leading voices on all things technology, really for the last 25, 30 years. We appreciate getting a few minutes of his time. Gene, I'm just going to speak for myself, but I probably speak for most of my radio and YouTube audience. I did not know what DeepSeek was before this morning, but now I'm learning. What should I be learning? What should my takeaway be today?
I think that the highest level, this whole chapter is about, the first takeaway is that investors are nervous that this 85% move in the NASDAQ over the past couple of years has created an environment where any sort of ripple in what that AI trade looks like is going to cause a significant impact on some of these valuations. So I think this is a temperature in terms of where the market is at. As far as kind of the company itself is concerned, DeepSeek, what's most important here is that they are advancing or presumably advancing the cost of training these models. You've talked a lot about it on the show today. And why that's important is there's a question about how much hardware is needed for that. And that obviously impacts the big hardware companies. And then separately, how does that accelerate the adoption? So there's the truth is always several layers below the surface. And I think when it comes to DeepSeek, there are still some pretty significant unanswered questions. And I'll start with one of probably the biggest one is that this $5-6 million training number that has the market upside down today, that was not their most recent model. They have an R model. It's unclear. Maybe that was $25, $50, $100 million to train it. It probably was below what the most recent version of OpenAI's model, which is anticipated or estimated to be about a $500 million in terms of training. So I think big picture here is that how we are delivering AI is evolving, and there may be some pretty significant improvements in terms of the ability to do that at a lower cost.
So to that point, Gene, how much, if you look at NVIDIA in particular, it's down about 283 points. What part of that is justified?
So I think the big picture here, I think that this is an overreaction. I think it's, when you look at a company like NVIDIA, it's a company we do own, and I think that this is an overreaction. And just specifically around that, if we can kind of zero in on this concept that these models are becoming more efficient, let's just take DeepSeek at face value that they've had some sort of an improvement, is that that improvement, if you believe that the U.S. tech companies are competent, that improvement is around some architectures that have been talked about for the last couple months. So those companies, the big tech companies, the companies that are behind all the announcements last week, Meta increasing their CapEx spend, and I think that is all that is a belief that they still need this hardware. So when it comes back to AI and it comes back to the NVIDIA trade, is that I believe if they are reducing the costs to train these models, that I actually can build I think a credible case that could increase the demand for some of this hardware. If we are getting closer to general intelligence, if that potential is even closer, there's just going to be an insatiable arms race that's going to continue. And so I understand why NVIDIA is down today. I think it's actually a healthy thing. But ultimately, I think that their business is going to be just fine. We have to wait 21 trading days before we hear from at least NVIDIA on that. But I think it's going to be fine.
So, Gene, was it a coincidence that on Friday, Meta ups its CapEx forecast dramatically, which by magnitude I've never seen, from 50 billion to 65 billion, and then today we get this news on DeepSeek. Was that kind of, I don't know, coincidence?
I think that's just purely coincidence. But I do kind of go back to what we were just talking about a minute ago. Is I think it's important to note is that announcement from Meta, if you assume Meta is competent, and I believe that they are, that announcement came with the full knowledge of what DeepSeek was doing. So it's new to most of us today. But for these companies who have been making these huge investments, the concept of what DeepSeek had been trying to build has been, they've had a model that's been out. This has been something that's been aware for the last couple of months. And so I think that is important, is that I think, again, that this commentary on Friday from Zuckerberg about the increased CapEx factors in some of these potential breakthroughs that we've seen with DeepSeek. I want to stop short of saying it's definitively a breakthrough. There's a lot of unknowns around how good the models are and what the true costs are. But I think that the AI investment phase is still alive and well. This is still very early.
So if this could be an overreaction, we don't know. Fair enough. NVIDIA, obviously an overreaction, the stock, the way you look at it. Does it make you think, though, a rating of 41 times estimated PE?
So from where my head's at and thinking about calendar 26 at this point, and based on the calendar 26 numbers, I think it's closer to like a 25.
Okay.
And I think that they can grow earnings more than that. This is where basically the rubber hits the road, is that ultimately what happens in calendar 26? All the stuff we're talking about with DeepSeek today really impacts NVIDIA in 26. And if in fact this dramatically changes how the kind of hardware that people need, less hardware, then I'm going to be wrong. But if this does create this accelerated arms race, then I think that they're going to grow faster. And so I consider a one peg on that 26 earnings as actually a attractive valuation relative to the rest of the group. So I'm comfortable with the valuation.
Just a red headline crossing the Bloomberg terminal as we speak. DeepSeek says it is subject to large-scale malicious attack. So that's a headline. We'll have more reporting on that going forward. Gene, just real quickly, we're going to hear from some of the other big tech companies, Microsoft, Meta, Tesla. How do you think they're going to address this issue?
It's obviously, this is going to be front and center, the A topic. And I think they're probably going to address it by saying they still have plans to invest meaningfully more in calendar 25 over 24 when it comes to CapEx. And I think that will play part of reassuring. We're a long ways away from that. We got 2.5 trading days away before we start to get some of that commentary, before the mic gets turned over to the other side of the equation here.
All right, Gene, thank you so much for joining us. I know you're super busy today. Appreciate getting a few minutes of your time. Gene Munster, managing partner, co-founder, Loop at Ventures, taking a little bit of a longer-term view and a more broader view of what this can mean for the industry. But again, what we're seeing, at least immediately, some of the chip stocks, which are the beneficiary of all the, or one of the beneficiaries of all the AI spending, they are down noticeably today. But some of the software stocks, like Rana follows, actually higher today on the assumption that maybe some of the technology that they need will come at a lower cost.
Workday up by about 3.5%, for example. Also, you can look at Salesforce doing well at the same time. Interesting though, in the NASDAQ 100, the fourth worst performing stock is Constellation Energy,
right?
Which is the power company that has really benefited from these data centers. All right, coming up, David Kudla is founder, CEO, and Chief Investment Strategist at Mainstay Capital Management. We'll talk about the DeepSeek issue, what that means for AI, also the broader take on the market in a very busy earnings week. And then Mike McGlone of Bloomberg Intelligence will join us. We'll talk about Bitcoin slipping below $100,000, pivotal key level. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The tech-led sell-off continues off the worst levels of the session. You heard Gene Munster just a few minutes ago say this is an overreaction, specifically talking about the sell-off in NVIDIA. It is down close to 15%, this stock. Cheaper artificial intelligence model from DeepSeek, this Chinese startup, could make valuations of NVIDIA and other tech stocks tough to justify at this point. As we look at the overall stock indexes, NASDAQ 100 right now, 2.96% lower, 644-point sell-off right now. The S&P 500, 107 points lower. That's down 1.8%. The Dow Jones Industrial Average, 47 points lower, down just 0.1%. Also, I want to look at two small tech stocks surging after announcing plans to use DeepSeek's large language model in their businesses. These are Aurora Mobile ADR soaring 229%. Shares of microcloud hologram rising as much as 67%, and they made a similar announcement. And we're also seeing a flight to quality in terms of treasuries. The two-year yield down 5 basis points right now, 421. The 10-year yield, that is down close to 8 basis points. That's at 454. Just getting this email, Paul and Alex, from DeepSeek. An update has been posted. I can't read the Chinese here, but due to large-scale malicious attacks on DeepSeek's services, we are temporarily limiting registrations to ensure continued service. Existing users can log in as usual. Thanks for your understanding and support.
There you go.
So we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate it. Alex Steele and Paul Sweeney, we are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast Live, and that's the easy way to find us. So again, big movements in the markets here today on the back of this news about the DeepSeek and what it means for the AI trade and what the AI trade means for this market. David Kudla joins us, founder, chief executive officer, and chief investment strategist at Mainstay Capital Management. David, I don't know about you. I woke up to this thing. I'd never heard the word DeepSeek before, didn't know about this technology, this company, and what it means for the greater technology trade, but it's certainly having an impact on the markets here today. What's your take of this news of the day?
Yeah, good morning, Paul. I started hearing about it over the weekend, and it's, if it truly has the capabilities that it has, this is like a disruptor disrupting the disruptors of AI. We have a company coming in, open source, open architecture. Companies theoretically could do what they thought would be billions of dollars in infrastructure or costs. It would be mere millions, and that changes the landscape for companies like NVIDIA that have had a wide moat around them. And again, just depending on how this plays out, that moat starts to dry up.
So, David, how do you position now? Is it defensive then, because you want to sort of avoid what's happening? Is it a buy the dip opportunity?
Yeah, not defensive as in consumer staples and so forth, but look at who's going to benefit. We want to look at the companies and industries that are going to benefit from AI potentially being a lot less expensive to implement. So, that's good for more mid-sized companies as well as the large cap companies. In terms of industry sectors, we know that AI is going to revolutionize or at least make significant enhancements in the healthcare industry, in agriculture. I think there's too much emphasis right now on what this is doing to tech stocks, and the broader picture is if AI can be developed and implemented this cheaply, that means that much more productivity enhancements for companies downstream because they can afford to do it.
So let's step back here from the AI trade of the day here. We're getting into earnings season. Again, we're going to have a lot of technology companies over the next couple of weeks here. What are you learning so far about earnings season, and what do you need to hear from the remainder?
Earnings season's been going pretty well. We're expecting 12% earnings growth. We're pretty much on track for that. Some of the tech companies might be giving a little bit different guidance by the end of this week or during this week, because this is a significant infrastructure build. Energy companies, we have President Trump wants to drill, baby, drill. At the same time, there were companies looking at building mini nuclear reactors right beside their plant for their energy needs. Energy needs might not be there, so you might have a double whammy on energy demand and energy prices.
So in a broader sense, though, the thing I'm really thinking about is the U.S. exceptionalism trade that is totally consensus for this year. If that was really dependent on the AI scenario and the outperformance of the Mag 7, if that goes away, what does that do to a U.S. exceptionalism thesis?
let's see what DeepSeek really is and what it develops into, right? Let's get the real story here, or what some are skeptical about, and maybe skeptical about for good reason. If we're as good as we are in the U.S. And around the world, and it was going to cost 60, 80, 90, 100 billion for a company to implement this, now it might just cost 5 or 10 million. That's the Sputnik moment for the AI industry, right? And in the arms race, the Russians surprised the U.S. by putting a satellite in orbit first. We just got a big surprise from China. No idea that they had this capability, if it's real, and how good it is or not. But I think the main point is that all those companies that were going to benefit from AI can do it in a less expensive and cheaper way. And the tech companies, if some of them have already spent tens of billions of dollars for whether it's Blackwell or chips to come, overall infrastructure, energy needs. It's not about them using DeepSeek. It's that there's a technology there that is competing with OpenAI that can be replicated, that is so much more cheaper, doing maybe not the same thing, but almost the same thing, same capability and quality as an OpenAI applications.
David, what is your tech call here today, and has it changed at all?
No, it hasn't changed at all. I think some have thought that this might be overblown for Netflix on this sell-off. I think depending on what happens with DeepSeek, we'll see if it's overblown or not, or overdone. But no, we still like technology. Even when you talk about the Mag 7, a lot of those companies are companies that are going to be benefiting from AI. All those companies are still going to be benefiting from AI. We're talking about the chip makers that could be in for a world of hurt. We're seeing that in today's prices, and whether it's Netflix, Broadcom, all these tech-oriented companies. But I think we got to get the whole story on DeepSeek. It's almost too good to be true, right?
I mean, yes. But, investors got to move their portfolio. You're looking at NVIDIA down, speaking of, down about 309 points. Broadcom down by about 166 points on the NASDAQ 100. David, thanks a lot. David Kudla joining us there. Thank you very much. He's CEO, founder, and Chief Investment Strategist at Mainstay Capital Management. Commodities not spared of what we're seeing either. You got Bitcoin down. You got crude off by almost 2 percentage points. All the metals down as well, except for iron ore, go figure. Gold even down. Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, joining us. Is this just sort of a filter? First of all, what do you make of the move in commodities? Is this like a filter in through the risk off in the tech space? Is this something else?
I think it's all the above, Alex. The key theme, I think, for commodities, and I had last year, is commodities have one prerequisite to go up. They need the stock market to go up. And now that the stock market added 20% to last year, it's even more risky. So particularly, we'll start with Bitcoin. Bitcoin has a very high correlation to the stock market, and it's really expensive. It's pinned about 100,000 right now, but it's really expensive, and it looks like it's a greater risk if it's S&P 500 is of going down. And you look at all the other commodities, they look like they look in pretty good peaks. Crude oil around 80, natural gas around $4, copper around $4.50, corn around $5. And one thing they almost all have in common is they had speculators getting really long in futures. It's the wrong place. It's the time of year to buy. I think the risks are they go down with deflation. And the one thing that might go up is bond prices, U.S. Treasury bond prices.
So what's the Mike McGlone 2025 kind of theme for commodity spaces? What are you asking your clients to take a look at?
Deflation, Paul, and everything else except gold. I think gold's still going to make new record highs. It's still very cheap versus the stock market. Stock market's very expensive. I even Martin Adams on my side on that. And the key thing you have to think about is superabundance. We have an oversupply of crude oil, particularly in the U.S., and a declining demand from China. Okay, that's a problem. Prices should go lower. We have an oversupply of all the grains on the back of the big pump in prices, and massive supply coming out of Brazil and South America. Unless there's a drought, we're probably going to pressure prices lower. We just pumped up natural gas to 4 on very cold weather, and it's pushing back now potentially towards 2 or 3. You'll see that within a day or two in the March contract because of front month. and we've had pretty substantial speculative buying. That's what copper made a new high last year. It was just specs getting long. Now they're getting stopped out. So to me, the risk is, unless that stock market can go up, we're going to see pretty severe deflation reciprocal to the inflation we got to the peak in 2022.
Okay, so just go to gold for a second, and this is a super basic question, but why is gold down today when in theory this should be like the gold day? Because the stocks are off, tech is off, lots of uncertainty, go ahead and buy it.
So you can't see this on radio, but I used to have hair, and I used to be a futures trader. You sell what you sell. When you can't sell what you want, you have to sell what you can. And so you're hitting a bid in gold. You're hitting bid on almost everything today. But gold, in the big picture, is if we see more deflation and lower interest rates and less competition from that stalwart U.S. stock market, gold to me is a top asset to do well with Treasury bonds. The thing is, I go back almost 30 years with the Bloomberg Treasury Bond Index, and gold's the most expensive ever. So it looks like bonds are the thing to think about if we have deflation. And bottom line is, we have the deepest pockets on planet buying gold, and that starts with China's central bank.
All right, Tom from the Upper East Side writes in and asks, what's your call on Bitcoin here?
Down. I think the biggest risk is, the big thing about Bitcoin is it's speculative digital asset. It's pinned at 100 grand right now, but it has 10 million wannabe competitions. CoinMarketCap used to listen a couple thousand cryptos. Now there's 10 million of them. There's so much supply, so much speculative excesses. And yes, I was the one who was really a notable bullish bull before, but I've been known as a notable bear in crude oil because I think it got too high. And same thing in Bitcoin. The speculative excesses in Bitcoin and cryptos are just extreme. And here's a key test. If it can go up or stay stable with the stock market going down, that would be a good sign. But otherwise, I think Bitcoin is just a highly leveraged measure of beta at the moment.
Of course, Tom from the Upper East Side is Tom Keene, just so we're all aware. All right, Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, joining us. A couple things talking about positioning. Charlie McGilligot over at Nomura has great notes out. He looks at all the flows. He's looking at three things. Options, see calls go out of the money, and then you got to adjust your hedges. That's going to move flow. Also, leveraged ETFs, going to have to sell huge to rebalance those products. And then also you look at, say, short-term reallocation versus long-term allocation. Are we seeing any of that there? And I would throw in higher vol means the volatility funds are going to have to rebalance too. So I just wonder, like, if a lot of this is just the flows and the pressure in certain names. All right, coming up, you're going to go to an asset class that is performing well here, and that is the Treasury market. You got 10-year yields down by about 8 basis points. They were down more earlier. So again, it's sort of that off the lows of the session in the equity market. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, will be joining us. Also, there's like a Fed meeting apparently on Wednesday.
Oh,
yeah, we'll get into it. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker here in the Bloomberg Newsroom with this Bloomberg Business Flash. Tech-led sell-off with the AI jitters. The Chinese startup DeepSeek says it provides a cheaper AI model. And taking it on the chin right now, this is getting ugly. NVIDIA shares, they are down over 17% right now. The slide in tech comes at a time when the NASDAQ 100 was trading at 27 times estimated forward earnings, which is significantly above the 10-year average there. Meantime, Seema Shah, Principal Global, says the buzz over DeepSeek services a reminder to investors, don't put all your eggs in one basket.
Valuations are really extended. So coming into this year, there were already going to be vulnerabilities. Now, I don't think anyone quite saw this coming, but it really does accentuate that need for diversification, looking at things with lesser valuations.
And focus also is going to be on an earnings announcement this week from the likes of Microsoft and Apple, the first of the Mag 7 cohort of stocks. Profit growth overall for the Mag 7 expected to come in at the slowest pace in almost 2 years. Right now, the S&P 500, 117 points lower, down 1.9%. The Dow is down only 0.1% right now. And, of course, the tech-heavy NASDAQ 100, 3.2% lower. That is down 694 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. We are streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast Live. You can subscribe and do all that kind of good stuff, get into the chat and everything. Alex just mentioned something that I totally forgot. We've got a Fed meeting on Wednesday with all this DeepSeek discussion today. We kind of forgot about that. So we got a Fed meeting coming up this Wednesday, and the question is, will they cut? Will they signal about cuts, or will they stay on the sidelines? Ira Jersey joins us, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Ira, what do you expect from your Federal Reserve this week?
Yeah, I don't think, well, the Federal Reserve's not going to do anything on Wednesday. The question is, to your point, Paul, is what do they signal is going to come next, right? So, on a day like this where you have, a lot of equity market jitters, you have some information coming from the housing sector that was pretty decent, it seems like there's a lot of still mixed signals for the path of the economy. So I think Jay Powell will wind up not talking a whole heck of a lot about rates, because with the new president in town, he's going to be asked, like, how are you going to keep on replying to a president who wants interest rates to be lower? And Jay Powell's going to have to respond to those kinds of questions, I think, on Wednesday.
What is he going to say? He's going to say, we're going to look at the data. We're data dependent, right? But how many times can he say it in how many different ways?
Yeah, well, that's I think a huge part of what he's going to have to say. Obviously, the opening remarks continue to be a little bit more hawkish. So, Alex, on TV last Friday, you showed our Fed sentiment index about the opening remarks that Jay Powell's been making over the last couple of meetings, and he's gotten less and less dovish and more hawkish during those press conferences. And I suspect that it'll probably level out a little bit here in terms of how hawkish or dovish he sounds. But he's going to have to basically say, like, look, we're going to cut if we need to, but we're not in any rush, right? And I think that that's the important verbiage that he's likely to come out with. Importantly too, even before then, and Alex, this is one of your favorite subjects. We have auctions this week. We had an auction at 11:30 this morning of the 2-year. We have the 5-year at 1 o'clock and the 7-year tomorrow, all while the Treasury market's rallying on a risk-off move thanks to what's going on in the stock market. So, so we have a lot that we're looking at right now on the rate side of things.
Ira, what do you think how do you think the Fed is weighing the price stability mandate versus the labor mandate? What do you think is taking precedence these days?
Well, it has to be the inflation mandate right now, and I think that they switched to that basically about 6 months ago, where they went from, we're worried about the job market, the job market's really bad, but as soon as you saw that September job print, their thinking changed pretty aggressively, where they're not really worried about the job market right now. And in fact, I think that they're saying, okay, look, wages continue to rise at a reasonable pace. The job creation is still above what's needed for replacing retiring workers for the moment, right? That could obviously change in the future. But right now, the labor market looks fine. So now they're worried about, okay, what's going on with inflation? We've seen inflation uptick just a little bit in some of the measures. So I think that will continue to be a focus of theirs. And if they're worried that inflation will continue to tick higher, that's just more reason for them to sit on their hands until it's pretty clear which direction inflation's going.
Going back, though, to the immediate statement and presser and the data-dependent situation, what we learned from the minutes is that there were officials that specifically brought up the tariff risk and President Trump's economic plans in the meeting as a reason for why they were thinking about either to hold or to hike or to cut or whatever. Not to hike, but you know what I mean. So how can he avoid saying that they're data-dependent when they're not, when there are officials there in the meeting, it's documented, that have been talking about this?
Well, remember, he's talking for the entirety of the committee, so even though there might be a few, right, a few is 2 or 3, members that are worried about the price impact that tariffs might have on the goods sector and inflation overall, he talks for the broad majority of the committee when he's making his comments. And if most of the members think that they're going to continue to be data dependent and worry about what's going on with both the incoming inflation data. But remember, when they say they're data dependent, that also does include the outlook for inflation, right? It's not only the incoming data, it's how the incoming data is shaping up, plus how the outlook changes based on that incoming data and other factors, right? Like, everyone's been asking me, like, what do you think about, how are these tax cuts going to work? How is the spending cuts going to work that Trump's going to do? We don't have any specific proposals yet to be able to analyze what that does to budget deficits, what that does to growth, right? We don't have any of those details that you need to make real things. We can guess, but they'd be guesses and not forecasts, right? And there's a big difference between a guess and a forecast.
Ira, how does Jay Powell deal with the political pressure? Has he ever said anything about that, or people observed anything? Because, boy, that could be a hot seat these days.
Yeah, well, it is, and it has been. And in fact, if you go back and remember to the press conference right after the election, where he was asked specifically, could the president fire him? He said no. Were you intending on leaving before your term ends? And he said no. And he literally gave one-word answers to both of those questions. And so I think that Jay Powell is, would like to finish out his term. It's going to be, he's going to get questions that are probably going to annoy him. And I think the question will be is how calm can he stay under answering questions that he really doesn't want to answer. I think he would like to stay in his lane and say, look, we want to discuss monetary policy, we want to discuss the economy, and we want to discuss what's going on with inflation and the job market. And those are, and anything outside of that, I think he'd prefer not to speak about.
And then, in all fairness, like, he has played this before. Like, this is not his first rodeo with President Trump, and President Trump not liking him. So there is that part of it. So let's go to the range for yield. So you brought up the auctions. You get the 2-year bid to cover, so a sign of demand coming in a little bit weaker than the last auction. We get the 5-year in just about an hour and a half. What's the range that we're seeing now in the 2-year and the 10-year?
Yeah, so we extended the upside in yield ranges recently, particularly in the 10-year sector, 7-year sector as well. We get the 7-year auction tomorrow, a little bit higher than where we thought we would see this year. But it's not a big surprise that we're coming back. So very important technical levels. 10-year is around 4.5%, 4.49 if you want to get super technical. But above that level, below that level, we actually can see that the market potentially gap significantly lower. But I do think that we're going to be in for the 10-year low 4s to mid 4% range, probably for the foreseeable future, until we get some clarity on what the direction of both Fed policy and the economy are. Right. If the economy falls out of bed, we could be back toward the recent yield lows in a hurry. But that will take some big risk off moves, I think, in stocks and maybe in the corporate bond market.
20 seconds, Ira. What soccer match do I watch this week? I've got no NFL football.
I hate to say that I have not looked at any of the matches for this upcoming week. I was disappointed that my Aston Villa got a draw yesterday after being up for most of the match against West Ham. So that was a little bit disappointing.
Disappointing. There you go. Ira Jersey, Chief U.S. Interest Rate Strategist, soccer aficionado, Bloomberg Intelligence, the co-owner of Real Central, Jersey. It's a thing. There's minor league soccer.
Okay.
There's a thing.
I'm into it.
He's all into it. So
Sure.
he does the junior soccer, the kids soccer, he does it all. And he also does the interest rate thing on the side. This is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
Happy Monday, everybody. Happy tech chip sell-off here. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Interactive Broker Studio right here in Midtown Manhattan. Also check us out on YouTube.com. Let's get a different angle for the DeepSeek news that we've seen really disrupting the tech guys, particularly chips. You're looking at the NASDAQ off by a full 3 percentage point, led by NVIDIA, led by Broadcom. And Dick Curran is Bloomberg Global Economy reporter. He also lived in China for many, many years and covered the economy there. And from that perspective, what do you make of this DeepSeek news?
So, look, obviously there is a technical debate going on about, just how good this new technology is or isn't. It's certainly been on the radar of tech watchers for some time. I see a debate going on about open source versus closed source and the like. But, Alex, taking at face value, it suggests that China continues to make good progress on the tech front despite all of the ongoing restrictions that the US has imposed on it. So, for example, curbing the flow and sale of semiconductor chips to China, for example, trying to make it all harder and more difficult to do business in the Chinese tech sector with investment restrictions and the like. So, on face value, if this DeepSeek model does prove durable and it gets the tick from tech experts, then it does suggest that those efforts to contain China's competitive so far seem to be, have more work to do, put it that way.
And do we have any idea how China generally views what is becoming, I guess, a technology Cold War between China and the West? Did they feel like, hey, we're okay, we've got all the resources we need, we're going to be fine? Or are they concerned about it?
Oh, they've been concerned about it. I mean, obviously, they push back very hard against U.S. policy to make it clear that they view it as containment of China's economic ambitions. The U.S., of course, frames it differently through the kind of a strategic or national security lens. But nonetheless, China has been doubling down on trying to source key technology, source chips from overseas, from Europe, for example, and also domestically. They are putting a lot of focus and investment into higher value-add technology. I mean, there's a line going, one of the lines in China at the moment is that the broader economy is slowing down because that's not necessarily where the focus of policymaker is. It's very much on the technology and national security front, and that's why they're considering that. That's why they're making the progress that they are. And it's not just DeepSeek, for example. Huawei is in another case held up by analysts that, on the one hand, the US moved hard to try and curb some years ago, maybe even cripple that company, but of course it has shook off those restrictions and continues to do well in the global tech marketplace. So lots of question marks over how effective US policy is being. Some would argue, I should just say, some would argue that it will take time for the full extent of US export controls to really make their mark on China.
Yeah, and I guess the question then is, how do they keep evolving? Because if, no doubt, President Trump is going to go aggressive on tariffs. We know that as a negotiating tactic. But if there is sort of avoiding chip sanctions and then also advancing technology, it feels like we're definitely going to be getting something stronger from the incoming administration. What would really put the restriction on this industry in China? What would we need to see?
Well, I guess, as I was just saying, Alex, one point to expand on is there is a view that the chips that these Chinese companies are currently using are a generation or two behind the latest advanced chips that the US have been putting export controls on going to China, and that it will take time for those export controls and those restrictions to really start to bite. So there is a view that, wait and see this, it's too soon to write off what the US has been trying to do. But nonetheless, though, more broadly to your point, it will certainly spark debate about, does the US need to go harder? What should it target? How can it target it? What can it do without impeding its own economy? There is a widely held view that US policy for the past few years has actually accelerated China's own technological innovation on the indigenous front, that it's made them focus on ensuring that they are self-reliant rather than reliant on the US. So there are many ways you can split this, but on the surface, as we sit here today, it looks like Chinese companies continue to do well despite all US efforts, and to your point, that probably will not go unnoticed by the hawks in the Trump administration.
Well, I think a lot of investors, particularly investors in Alibaba and Tencent from several years ago, they feel like the biggest risk to Chinese technological growth is the Chinese government itself, given some of the policies that and restrictions they imposed upon that first wave or initial wave of great technology companies, again, Alibaba, Tencent. What is the government's view towards technology and supporting it?
Yeah, completely right. That crackdown of technologies is one of the reasons why people say the wind has really been taken out of China's economy sales. The broad approach is that, the central government, the Communist Party, wants to be in control and doesn't want anything operating outstand beyond the extent of its reach. And that's why the tech sector was reined in. There's probably a view now that they perhaps had some overreach in that respect. And that's why they're trying to, soft sound or soft signal there in terms of what they want to encourage tech development in the economy, put it that way. But nonetheless, leaving the consumer tech story aside, there's no doubt when it comes to high-end value-added chips and semiconductors and technology in the national security space, the government and the Communist Party are all in, and they're pushing for full development of that sector.
And we really appreciate it. Thank you so very much, Enda Curran, Bloomberg Global Economy reporter, joining us on the political and economic angle of China and these chip stocks. Man, this market looks ugly. NASDAQ is up by 3.2%, S&P off 1.8%, Dow Jones flat. But talking about that, the Dow Jones is flat. You're also seeing the Russell 2000 not getting hammered. You're gonna that's not what we're looking at. You're not getting hammered. You're doing well.
Right.
And mid caps too.
It's a tech trade here today, tech-driven marketplace here. We see that with the NASDAQ off 3.2%. Again, in the futures market, it was down 5.2%, so a little bit better, but we have weakened up here just a little bit in the last half hour or so.
Yeah, you're looking at the Russell up by 0.8, the mid-caps off by 1, but compared to the NASDAQ, that looks like a bargain. All right, that wraps it up for today on this Monday. Good luck trading, guys. Coming up, Balance of Power with Joe Matthew is next, right after this Global News Update.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. New Defense Secretary Pete Hegseth vows to help carry out President Trump's plan for mass deportations.
Whatever is needed at the border will be provided. This is a shift. This is not the way business has been done in the past. The Defense Department will support the defense of the territorial integrity of the United States of America at the southern border.
CBS's Olivia Rinaldi reports new executive orders this week impact the Pentagon.
The first executive order being related to the service of transgender persons in the military. This wouldn't be a blanket ban. The second executive order would ban the use of DEI policy in the Department of Defense and the Department of Homeland Security. And the third would reinstate members of the military who were discharged for refusing the COVID vaccine back when that was rolled out.
A memo obtained by CBS News says the administration has directed officials to cease allowing immigrants into the U.S. through parole programs and to stop extending their status. That's a move that will affect Ukrainians and Afghan evacuees. Now to northern Gaza. Tens of thousands making the trek home, most on foot. CBS's Ramy Inocencio.
Mostly rubble is what they're returning to, because we know that the IDF has been focused on northern Gaza in order to try to, in its own words, destroy Hamas.
In Poland today, a solemn ceremony to mark 80 years since the liberation of the Auschwitz death camp. Tova Friedman, a survivor, was a child when she was first taken there by the Nazis.
Hot, hungry, thirsty, and very terrified, I held on tightly to my mother's hand in the dark cattle car.
A magnitude 3.8 earthquake centered near the Maine coast rattled homes in northern New England today. It could be felt as far away as Pennsylvania. No reports of any significant damage. Word of a Chinese startup that can do what the top AI companies in this country can do for a fraction of the cost has upended financial exchanges today. CBS News business analyst Jill Schlesinger.
This sell-off that we are experiencing, maybe it's going to be something bigger, but to take this day in isolation without understanding where we've come from over the last 1, 3, 5 years is really going to make you insane.
And checking Wall Street, the S&P is down about 2%. The NASDAQ is off 3%. The Dow is up a few points. This is CBS News.
Terms and conditions apply.
Some homes seen on TV have been hit by thieves.
Police
in London are trying to track down some thieves who've robbed 4 homes in the affluent suburb of Richmond Green over the last few months, featured in Apple TV's Ted Lasso.
If seeing is believing, I believe we've been seen.
One of the homes belongs to English rock star Richard Ashcroft. Officials say he and his wife were away when the gang swiped an estimated $1.2 million worth of valuables, including a luxury watch. Metropolitan Police believe the culprits are part of a team of professionals from South America. Deborah Rodriguez, CBS News.
Critics trashed Mel Gibson's new movie Flight Risks, but it debuted at #1 at the weekend box office, taking in $12 million. The Brutalist got a wider release over the weekend after its Oscar nominations. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
And it's only Monday. Welcome to the fastest show in politics as we start the week with the fire hose, Donald Trump's Friday night massacre, the loyalty screenings, a near trade war with Colombia on a Sunday afternoon, the House Republican retreat in Miami, and I haven't even mentioned DeepSeek yet. We are joined this hour by Laura Davison, Bloomberg Politics editor, Gregory Allen from the Wadhwani AI Center at CSIS, and by our signature panel. Jeannie Shanzano and Rick Davis are with us for the duration with a lot to unpack from the weekend and help to understand on this breaking story today that's pulling the market lower, which is where we start right now with our friend Charlie Pellet, the markets at World Headquarters in New York. Charlie?
Hi, thank you very much, Joe Matthew. Manic Monday, deep losses after news from DeepSeek. We have got the Dow higher, but the S&P, NASDAQ all in the red. Wall Street having a rough start to the week on concern that a cheaper AI model from Chinese startup DeepSeek could make valuations of the technology that has powered the bull market tough to justify. DeepSeek, meanwhile, says it is restricting signups for new users to people with a mainland China telephone number, claiming its system had been targeted in large-scale malicious attacks. Right now, we have got the S&P 500 index trading lower by 1.8%. The S&P now at 59.92, a decline of 108 points. The Dow now flat on the day, while NASDAQ particularly hard hit, looking at a 3% drop right now, down 602 points. We have got the NASDAQ 100 index also down by 3%. 10-year at 4.54%, the 2-year 4.20%. Gold now down 1.3%, 27.31 the ounce, and West Texas Intermediate crude down 2.9%, 72.48 a barrel. Bitcoin, meanwhile, below 100,000 at 99,805. Bitcoin down 4.5%. Investors are keeping an eye on Washington, though, specifically tariffs and the implications for inflation. Oksana Aronoff is head of market strategy at J.P. Morgan Investment Management.
If you think about this administration, and again, we don't know what they're going to do, but everything they're saying around tariffs, around immigration, right, every policy out there is inflationary at the end of the day.
And I mentioned tech stocks being hit particularly hard. AI darling, NVIDIA, right now down by 15%. So again, recapping, stocks are selling off. S&P down 1.8%, NASDAQ down 3%, the 10-year 4.45%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues, the Monday edition. Once again, your host here is Joe Matthew.
All right, Charlie Pellet, thanks for going easy on us here. Charlie's the bearer of some brutal news today. We're going to be following the market reaction to this DeepSeek story and trying to dig a little bit deeper into it. We have an important conversation ahead with Gregory Allen, who's the AI expert at CSIS and knows a lot more about this than you and I do combined. Be with us a little bit later on in the hour. For that, we'll also play this to the panel because it's a pretty good day for some golf, certainly if you're in Miami. Happening at the Trump National Doral, Miami, the House Republican Conference, on the ground, kumbaya, and yes, golfing to start things off today. We expect that we will hear from House Speaker Mike Johnson a little bit later on. 3 o'clock, 3:30, he's going to have a news conference at Doral. The official proceedings get rolling, a closed-door event with the boss himself, Donald Trump, of course, at Doral. About an hour's drive, I read, south of Mar-a-Lago. But boy, what a weekend it was as we try to unpack all of this. Donald Trump, fresh off Las Vegas. Did you see him at the craps table? He's in Las Vegas to rally the troops as if he were still in the campaign. And yeah, he did show up at a casino. Talked about the no taxes on tips. That's where this whole thing was born, right? Here's Donald Trump in Vegas.
I'll be working with Congress to get a bill on my desk that cuts taxes for workers, families, small businesses, and very importantly, keeps my promise for a thing called, and I know you didn't hear anything about this, and I'm sure it had no influence on the state, but I'm sure you haven't heard, but we're going to get it for you. No tax on tips. No tax on tips.
Love it. They loved it so much. Remember, even Kamala Harris picked that one up. And it is potentially complicating matters for those lawmakers who are tasked with extending the Trump tax cuts. This is just scratching the surface on what we need to cover with Laura Davison. She's with us now off a very busy weekend. Great to see you. Your team must be breathless here. We all said the same thing at the end of last week. Are we going to, this is the new normal again? We're going to do this every week?
There is no slowing down. Just keep your metabolism high and it'll keep flowing.
Well, so the arc of the weekend was incredible. It started with what they're calling the Friday Night Massacre. Harkening back to Richard Nixon, Donald Trump firing the inspectors general. This is a long list at the Departments of Defense, State, Transportation, Veterans Affairs, Housing and Urban Development, Interior, Energy, Commerce, and Agriculture, as well as the EPA, the SBA, and the Social Security Administration. That's a pretty broad swath of government. What's the point? Why? What is he doing here?
And I'll note, this also includes some people that he appointed to these positions when he was in office. But the Inspector General, these are really the people, they're typically not well liked within their agency because they're the auditors that are looking to, find holes in efficiency, where programs that aren't effective, where there may be gaps in funding and that the money's not being wisely spent. I'll note this is an interesting move for, someone who has had Elon Musk at his right-hand side saying he wants to root out, wasteful spending and all of these things. It's the IGs who actually go and find all of that. That would be sort of list number one on where you want to go. But this is clear that he wants to have all the people who are, doing this kind of work be loyalist, be in lockstep with him. He said this was something that normally happens. I'll just note that this is not a normal thing. Generally, these people span administrations and do not come and go.
So this is the so-called deep state, I guess he's trying to get at. To your point, though, these are some of his own appointees, and he failed to notify Congress. You have to give them 30 days or something on that. Does that matter, or does nothing matter?
And with all of these, there are already been some questions raised about, the legality of this. Could this be challenged? But, with the fire hose of everything that's coming in, both the administration as well as sort of folks who are filing lawsuits challenging some of these moves, they have to prioritize. They can't, fight everything tooth and nail.
Okay, so we move on to the loyalty tests also happening now. About 160 staffers from the National Security Council were sent home. And they're combing through, I guess, their social media, prior statements. What are they looking for?
They're basically looking for anyone who may have criticized Donald Trump.
You're out of a job if that's the case?
They are likely out of a job. I mean, these are folks, these are civil servants. These are not political folks, even though they work for the National Security Council. They were sent home on Wednesday. They still have their things in their desks in the White House, but they were basically informed that they would be leaving, had their email access cut off, immediately escorted out of the building. They now, essentially to come back, when they go to pick up their stuff, most of them are assuming that they will not be coming back employed. Okay. They are escorted full-time. It is harder for them to get on the White House campus than it is for a foreign national.
Wow. This is, and by one of the most high-profile firings, the Coast Guard Commandant. This is, or was, Admiral Linda Fagan, the first woman to lead a branch of the U.S. military. Is that a good look for the administration?
Not particularly.
What did she say wrong?
I don't know exactly on the reasons behind this one, but this is kind of what you see, Trump doing. He waited till Friday night to announce a lot of these, and these were, so this is, he is clearly looking at, both the federal workforce as well as sort of this upper echelon of management and people. He wants to install his own people or, force people to leave.
Amazing. Accused of an excessive focus on DEI at the Coast Guard Academy. Your point is you're probably not going to survive the scrub. If you got shown the door for a loyalty test, you're probably not coming back.
That's very, very, very likely. And a lot of times they already have people who they sort of have identified to fill some of these, backfill some of these slots. I'll note that the incoming Trump team is way more organized than they were the last time. There's still, been a lot of the kind of that first week, a lot of staffers didn't have emails, so there's a lot of confusion as to exactly what's happening. But there is a plan, and kind of, as more people get appointed, get their Senate confirmation, these are kind of being trickled down throughout the government.
This plays well with Trump supporters, though, right? Drain the swamp. That's what it looks like.
Absolutely. Yeah. The real question, though, is if you suddenly start cutting programs for things like food stamps or certain farm aid programs or things that affect people,
bump into somebody
out in the community, that's when people might sort of realize, oh, I was counting on that subsidy, or I was counting on that payment. And there's a constituency for essentially every program in the federal government. That's why it exists. And when you start cutting things, that's when the rubber meets the road.
As we spent time with Laura Davison here on Balance of Power, we almost had a trade war yesterday. It lasted for a couple hours. Maybe we did have a trade war. Maybe it was the shortest trade war of all time. Colombia. We stepped back from the brink. I saw an email go out around 11 o'clock last night. They got this done in time for business on Monday. What started this to bring Donald Trump to threaten a 25% tariff against Colombia? Because they've been intercepting these flights of migrants from the U.S., and that seemed to be working well until now.
So the Colombian government said that they would not accept this military plane that was coming with migrants, and they were both shackled at their ankles as well as handcuffed on their hands, that they really objected to.
The fact that it was military was the problem.
Yeah, it was sort of a confluence of the military. They also, in some of the statements that came out later, it was clear that they were concerned about sort of dignity, human rights around the treatment of their own citizens coming back. So that was sort of the points of negotiation throughout the day. But this is really going to be instructive on how Trump is thinking about tariffs. He said, look, this country did this thing I didn't like. They refused these flights that I want to go. So I'm going to come out and announce a tariff, effective immediately, 25%, announce additional sanctions and travel restrictions for the country's diplomats. And then Colombia was forced to immediately respond, because a 25% tariff on anything coming into the U.S. would have been a really big deal for them. And within a matter of 5, 6, 7 hours, they were able to come to some sort of resolution that both the Colombian government was happy with and Trump was happy with, at least for the time being. We'll see if this crops up. But this is really the question as everyone's looking towards February 1, which of course is the date that Trump has said he wants to impose tariffs on Mexico, Canada, and maybe China. We'll see where that lands. And that's 6 days away. That's Saturday. So it's unclear if the tariffs are actually coming or if that's really more of a starting point for negotiations.
That's a nice looking economy you got there. It'd be a shame if something happened to it. We haven't even talked about DeepSeek. We have a minute left. This is the story of the day at Bloomberg. The markets are falling out of bed over this. And Donald Trump at some point is going to have to respond, I suspect, unless you're going to tell me he has already. Considering the TikTok divest or ban, is this the next app to be banned by the Trump administration?
It certainly could be. We know from all the statements last week and the executive orders and the big press conference at the White House that he is very focused on AI. He says he wants to be dominant in AI, and this is the kind of thing that Donald Trump is very scared about, that China is going to come and sort of usurp the U.S.'s lunch. So I expect that we will see some response from him soon if he hasn't, announced something in the past couple minutes since we've been talking.
There are national security implications here potentially, right? If they're scooping up Americans' data, it's kind of like TikTok all over again.
But with even more access to emails, access to location data, it would be
your
a
Gmail
huge,
account and your
huge
phone
change.
number. Good Lord. And it's only noontime on a Monday. As I said, just think of the week that Laura's going to have. We'll go through this together with the help of Laura and her team. Thank you, as always, for being with us here on Balance of Power. I'm Joe Matthew in Washington. We're going to go deep on DeepSeek. Coming up next with an expert on AI from CSIS. We sit down with Gregory Allen next, only here on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Headline off the Bloomberg Professional Service. President Trump will sign an order creating an Iron Dome for the United States. That according to CNN. Headline right now on the Bloomberg. We've got the Dow higher, advancing to just about the best level of the day, up 50 points now, a gain of 0.1%. But the real story is the sell-off in tech. We've got the S&P 500 index down 1.9%. NASDAQ is now plunging by 677 points, gain there of 3.4%, just about the low of the day for both the S&P and also for NASDAQ. The 10-year, 4.54%, with a 2-year yielding 4.20%. Spot gold down $36 the ounce, down 1.3%. And West Texas Intermediate crude down 2.4%, $72.86 for a barrel of WTI. Bitcoin, meanwhile, trading below 100,000, just above 99,000 right now, 99,145. A Bitcoin is plunging by 5.2%. Today's DeepSeek news has put a spotlight on AI chip producer NVIDIA, whose shares soared 9-fold in the past 2 years, making it the highest valued company in the world. NVIDIA today, though, selling off, down now by 16.3%. Among other Mag 7 tech names, Apple, Meta Platforms, Tesla, they all report this week. Meta, though, trading higher by 0.8%. Apple down 2.9%. Tesla down now by 2.7%. But in response to DeepSeek, we do have NVIDIA shares plunging now by just about 16.5%. Earnings news, we heard from AT&T this morning, up 6.2%. Verizon reported last week, up 2.5%. T-Mobile reports this week, up by 1.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Charlie's going easy on us today. This is a tough market, but we need to get the facts here, and we'll get back with Charlie in a bit to see how this is evolving, hopefully not regressing. A more than 660-point loss here on the NASDAQ. The VIX is up 25%. It's kind of all you need to know. And it has everything to do with DeepSeek. As Charlie was just mentioning, it's where we started our day here. Everybody woke up to this news on the terminal. How many notifications about DeepSeek did you have? Or had you already downloaded it? Maybe you're part of this whole story. Enter Jevons paradox. Maybe you saw the tweet from Satya Nadella, the CEO of Microsoft. Jevons paradox strikes again. He writes, as AI gets more efficient and accessible, we will see its use skyrocket. He's defining it here, turning it into a commodity we just can't get enough of. Interesting, and a great place to start our conversation with Gregory Allen. You've met Gregory before on this program. He is one of the foremost experts on AI in the nation's capital, and in fact, director of the Wadhwani AI Center at CSIS, the Center for Strategic and International Studies, former director of strategy and policy at the Department of Defense Joint Artificial Intelligence Center. This is the guy you need to hear from today. It's great to have you back. I can only imagine your thoughts when you see an AI story explode like this in the mainstream media. I've got a lot of specific questions for you that hopefully you will have answers to. But in terms of Jevons paradox, why does it matter here?
So I think the stock market is looking at DeepSeek and they're saying, oh my gosh, here is a company who has found a way to make pretty high quality AI much more widely available for much cheaper. So therefore, the price performance of a company like OpenAI, how are they going to justify that cost when suddenly it's so cheap to make? And the Jevons paradox has a really important answer to everybody who's out there shorting NVIDIA or shorting Microsoft right now. It basically says that as something becomes cheaper, people want more of it. So Jevons, the observation actually dates back to the Industrial Revolution, where he pointed out that steam engines are getting more and more energy efficient, but we keep using more and more coal. Because as we get more energy efficient, then you can economically justify using coal in an application that you couldn't before. The exact same thing is true in computing. The cost of one flop, one operation of computing, has dropped by, 20 trillion fold since, the 1950s when we first invented computers. But are we using more computers or are we using less computers? Are companies making more money selling computers or less money selling computers? The basic point here is that Microsoft is, thank goodness AI is so cheap, because now the universe of people who are going to want to buy it from me just grew a lot.
Fascinating. What does this mean for the energy companies, by the way? It's not just the NVIDIAs that are down. It's the Constellations and the others that we've been talking so much about. Clean, renewable. Is it going to be nuclear? Will we still need expensive energy if Jevon's correct?
Well, it's the exact same phenomenon.
Decline in price as well.
No, it's the exact same phenomenon, just applied to the energy. Okay. If you go back 10 years, how much was data centers as a share of the U.S. electrical grid demand? Yep. It was hardly anything. But at the exact same time that computer chips got more powerful, that algorithms got more efficient, suddenly data centers are actually a pretty reasonable chunk of the U.S. grid. Yeah. And now it's looking like they're going to consume a lot more. Mm-hmm. Well, increasing efficiency has already been a part of that story. An NVIDIA chip today is literally 10,000 times more efficient than an NVIDIA chip a decade or two ago. Yeah. And at the same time that they're getting more efficient, at the same time that you're using less energy per unit of computation, you're making the economic and the business case that much more attractive for every additional use case for that competition.
I have to admit, this all sounds pretty positive in the grand scheme. So let's get to this case specifically and why Wall Street is so freaked out. DeepSeek, we're told this happened with $6 million in funding. Is that possible? Is that true?
So it's which part of the story you want to say. Okay. This specific model training run, right? When you're training an AI model, how much computation did you use on that one run? Yes, that was $6 million worth of computation. But there's all the other model training runs that didn't work, right? When DeepSeek says that's what it costs, that they didn't say their entire computing costs for all of their research and development, for all the work that went into creating this model was $6 million. They said this one individual training run was $6 million. Another thing to note here is, part of the reason why everybody's so excited is this is a model that has reasoning capabilities. This is the advance that OpenAI came out with in the O1 series of models in September of last year. Well, it turns out what DeepSeek has proved is that upgrading a pretty decent base model, think like GPT-4, to a reasoning model, that is actually not as computationally intensive as had been understood widely in the press. But inside the big AI companies, OpenAI, Anthropic, they already knew all of this. They were already benefiting from all of this. Recall that Sam Altman said that O3, the most advanced category of model, the one that was blowing away benchmarks in December of 2024, he said the price of giving away that model usage, free, right? So costs are coming down for everyone, not just for DeepSeek. What DeepSeek is doing is replicating a series of research that American AI companies had already been benefiting from. They just weren't sharing it loudly and publicly.
Okay. Did this company get its hands on NVIDIA chips? Or did it reinvent the wheel with some kind of popcorn chip that it stacked in a way that we've never seen before?
So according to this company, according to DeepSeek, they used NVIDIA chips.
All right.
But they specifically used NVIDIA H800 chips. So folks who watch the export controls debate in Washington, export control policy in Washington closely, such as myself, you may remember that in October 2022, that's when the Biden administration launched this AI chip restrictions, export controls strategy. But they got the performance thresholds wrong. They thought that they were saying, oh, you have to buy 2 generations old of NVIDIA chips. But what NVIDIA found out is actually if we make this one tweak to our existing best-in-class chips, they're actually legal to sell. So there was whereas the Biden administration was under the impression that they were putting China under like a 50 or 60% performance penalty, actually they were only imposing like a 10% performance penalty. And there was an entire year between October 2022 and October 2023, when it was illegal to sell unlimited numbers of these H800 chips.
So this is the whole story.
This is the story. They have been, export controls have a lagging effect, right? It's not like you stop selling it and everything that's already in China magically blows up, right? They still have what they already bought. And in this case, we are dealing with the failure of the design of the export control architecture of October 2022. Later this year, we're going to start living through the success story of the October 23 architecture, the December 2024 architecture, and it came out of the mouth of DeepSeek's CEO. He said, the #1 challenge my company faces is U.S. export controls, right? When Biden and Xi Jinping meet to discuss foreign policy issues, time and again, I've heard this from Biden administration officials, time and again, Xi Jinping changes the topic back to these export controls and why he needs them to go away immediately. He's not asking to get rid of them because they aren't working. He's asking to get rid of them because they are working, because they are imposing significant costs. Now, I don't want to suggest that there's no legitimate technical innovation underpinning this new DeepSeek model release. There's some legitimately impressive stuff in here. Folks who work at American AI Labs are reading these papers. They are seeing innovations they can use. But think about what advantages America can secure that are durable and hard to replicate, and what advantages China can secure that are durable and hard to replicate. All of the algorithmic innovation, all of the architectural innovation that is represented in this DeepSeek model, 100% of it is available to American AI companies. They get to copy any new innovation. By contrast, all the computational advantages that American companies have, Chinese companies can't copy that because they can't make the chips.
Fascinating. So I'm listening to you, and I'm amazed by everything you're telling me, and I'm wondering why all these stocks are down today.
Well,
you're making the case to buy NVIDIA.
Well, I would say in the long term, the stock market is based on truth. Sure. But in the short term, sometimes it's based on vibes.
So
and the vibes have been pretty bad.
Today is what's going on.
That would be my strong impression.
I mean, this isn't Blackwell we're talking about. It's not Rubin we're talking about.
Right. We're talking about DeepSeek. And it's legitimately important, right? This is an update in what people think is possible. But it's an update that folks who have been living in the AI industry are familiar with, right? Right now, we're living in the world of GPT-4 as the base model, O1 as the sort of reasoning model updates. But I remember when GPT-2 came out, and it was trained on a supercomputer, and now it runs on my laptop. And I remember when GPT-3 came out, and it was trained on a supercomputer, and now it runs on my laptop. So the point is here, there's no real update in paradigm. Computers start in supercomputers and they end up in personal devices, and that has been the trend literally since Alan Turing invented the first computer during World War II. Yeah. It gets faster, smaller, cheaper. But at the same time, you have to ask yourself, what kind of durable competitive advantages can we create? Yeah. And I think it's worth pointing out that we are on the cusp of a threshold, right? Sam Altman himself early last year said that the performance of his model was, quote, mildly embarrassing at best. And he had the best one in the world. But the point is, we are maybe a year away, maybe a handful of years away from AI models being able to perform so many different tasks in the global economy. And in some cases, being able to do so at better than world expert levels. So we are approaching this threshold when AI will go from useful for some things, fun for some things, to shockingly useful at so many things. And the companies and the countries that cross that threshold first are going to have an extraordinary first mover advantage.
That's not what we're talking about here, though. We're out of time, basically. This sounds
well, we got to talk about one more thing.
45 seconds. Go for it.
DeepSeek is having major outages right now.
Right.
They have attracted a lot of attention. They've got a lot of new user signups.
They're being attacked. Is that
they are not being attacked. They have run out of chips. It is the exact same story as when Gina Raimondo went to China in mid-2024, and they said that Huawei had a new phone, but they couldn't make enough chips for them. Now, they don't have enough chips to run the data centers to serve the users who want to use DeepSeek.
Huawei 2.0 here?
It's a very similar repeat of the story.
Amazing. Aren't you glad we had Gregory back with us today on Balance of Power? Fantastic. CSIS. He's the mind you want to talk to and hear from today on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. DeepSeek is rattling U.S. markets. Tech is tumbling. Looking at a 3% loss right now for the NASDAQ Composite Index. The S&P, to put it all in context, down 1.6%. Wall Street is having a rough start to the new trading week on concern that a cheaper artificial intelligence model from Chinese startup DeepSeek could make valuations of the technology that has powered the bull market tough to justify. NVIDIA shares now down by 16%. S&P down 105, down 1.7%. The Dow is up 124 points, up by about 0.3%, while NASDAQ is tumbling 633 points, down 3.2%. 10-year, 4.54%. The 2-year, 4.20%. Gold down $36 the ounce, down 1.3% at $27.33. West Texas Intermediate crude down 2.7%, $72.65 a barrel. And Bitcoin, big story today, plunging 4.6%, now at 99,700. Gregory Allen is director of the Wadhwani AI Center at CSIS in Washington. And moments ago on Balance of Power, he explained why Wall Street is freaking out.
Well, it turns out what DeepSeek has proved is that upgrading a pretty decent base model, think like GPT-4, to a reasoning model, that is actually not as computationally intensive as had been understood widely in the press.
Gregory Allen of the Wadhwani Center at CSIS in Washington, interviewed right here on Balance of Power. The Commerce Department reports new home sales posted back-to-back gains in November and December among home builders. KB Home up now by 4.9%, Toll up 2.9%, Pulte Home up by 2.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington once again. Your host, and here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Doing the heavy lift today on Wall Street. It's not a pretty market, and we're in touch with Charlie throughout the broadcast here as we cover politics in Washington. Thanks for being here on the Monday edition of Balance of Power. I hope you had a great weekend. We're back to it here on Bloomberg Radio, on the satellite radio, and yes, on YouTube, where you can find us right now. Search Bloomberg Business News Live. It's like the best thing going in live media. All of our shows, Washington to New York, throughout the day. We'll keep a seat for you in the studio. If you actually want to see how these shows are made and get involved in what we're talking about, we'd love to have you with us. It's on to the Doral. What's the full name? The Trump National Doral, Miami. The location for the big GOP House retreat. They're all there right now, an hour south of Mar-a-Lago, starting the day with some golf. Right now, lunching, preparing for Speaker Johnson to officially open things up after 3 p.m. And Donald Trump's going to speak to the troops there in a closed-door meeting. Republican House Conference. They've got a lot to figure out here. Reconciliation, the rest that they haven't yet. 4 championship golf courses at the Doral. As I read, 48,000 square foot spa facility, an outdoor pool. The pool has a 125-foot slide. You see that, James? Is Donald Trump taking the slide? Aged bone-in ribeye steak, $79 plus sides. The Experience Salon offers guests a selection of specially curated bourbon. I wonder where you go to get the IVs when it's all over. Let's assemble our panel. Rick Davis and Jeannie Shanzano are with us, having survived another weekend, and we're back to it now, still seeking a direction on Capitol Hill. The clock's ticking. It's the 27th of January. We still don't know if it's one bill or two. Rick is, of course, Republican strategist and partner at Stone Court Capital. Jeannie is Democratic analyst and political science professor at Iona University, senior democracy fellow with the Center for the Study of the Presidency and Congress. Rick, those ribeyes sound pretty good. I don't know if I'd go down the 125-foot slide with the boss watching, but is this actually the environment to create a deal and a way forward for Republicans?
Yeah, it's typical that Republicans would hold this kind of a offsite, and look, it's a challenging caucus, right? First, they only have a 3-vote margin of a majority, so 2 members bail and they don't have a deal, and so that's sort of the cloud that sits over Doral today. And the reality too is we have the 5 families of the Republican Party. And those guys don't get along so well sometimes, and they definitely have different priorities. deep cuts from the Freedom Caucus versus, Main Street wants to have more cuts for the business community. Problem solvers have a different point of view. They want to get along well with the Democrats. Well, those other two things get in the way. And then there's these big tax cuts. Trillions of dollars are at stake. Where are you going to find the pay-fors? Donald Trump was just in Vegas again talking about, the tax on tips. And, that's not an inexpensive item to include in this budget. So, where do they go from here? It's going to be a really interesting week down in Doral.
God knows that is true. We talked to Kevin Brady on Friday. You guys were on the broadcast. Former, of course, Republican congressman, used to chair the Ways and Means Committee. This is the tax brain. Formerly in the House, he's actually now working privately to help get the Trump tax cuts extended. And I asked him about, Rick, you mentioned no taxes on tips. We've got overtime. We've got so many other things that were promised on the campaign trail. The extent to which this complicates the debate on Capitol Hill. Here's what Kevin Brady said.
We've begun discussions on how you accommodate the president's priorities, such as taxes and overtime, Social Security. I'm really confident that they'll find common ground on assault, but they'll have to figure out with these new proposals, what is a good design for, regarding tips and overtime. What can they afford? How do they reach that common ground with the president? It's pretty natural conversation, and the good news is I think they're already running a number of options for the president to consider.
A lot of options. This is what we're talking about at Doral here, Jeannie. What's your thought in these competing factions that Rick described so well? When you have so many plates to spin, so many promises made on the campaign trail, do you just throw it all in there and deficit spend, or do they have to have spending cuts to pay for it?
Yeah, first of all, Joe, why aren't we down there? I understand it's in the 70s today down there. So we should be down there talking to them. Please, James.
Somehow didn't get my invite.
Me neither. The reality is that one thing we need to watch for is, does Donald Trump give any direction to address some of these challenges that you and Rick were just talking about? He is going to try to rally the troops, but the rallying part is the easy part. They all want to help Donald Trump get his priorities passed. But how you do that as it portends to cuts and as it portends to the pay-fors that Rick was talking about, that's really, really tough to do. And I'm not sure Donald Trump wants to get his hands dirty in that regard. He hasn't even been clear on one bill versus two bill. And so this is where the rubber is going to meet the road, so to speak. And, we do know it is far easier to run for office and make a litany of promises than it is to fulfill those. And by some counts, he's talking about $10 trillion they're going to have to find an offset. Where does that money come from with very little room to maneuver in a margin? And let's add to that, we've got a debt ceiling that needs to be lifted and a government that can't shut down in mid-March. So all of that is going to be complicating these negotiations while they're going down the 150-foot slide and eating their steak and so on and so forth, drinking their bourbon.
Yeah, do we get pictures of the members going down the slide? I wonder if anyone takes the opportunity. There's a grand dinner for tonight. Rick, not a big surprise, and Donald Trump will be speaking at that dinner. He'll be addressing lawmakers separate from the event this afternoon. You kind of frame this as a pep rally. Is that all he talks about, or is it time to get more specific about some of these initiatives?
I think we've just got to take the recent short history of his first week in office to get a sense as to what's going to happen down there tonight. He'll have, I'm sure, a prepared speech that he'll give that'll lay out some of the priorities that he's articulated, for instance, in the prepared version of his inaugural speech. But there's a high likelihood, especially because he'll feel like he's in a room with all his supporters, which would be true. He'll go anywhere he wants to. He may reprise the fight this weekend over Colombia. He may talk a little bit more about immigration and about taxes. It's just a free-for-all for him that you would be reminded of a campaign, right? And so I don't think the campaign has left Donald Trump, even though Donald Trump has technically left the campaign. And I think it'll be highly entertaining. I mean, that one thing will rouse the troops in the House, and try and maybe soften up some of the sharp edges between each other, because as we know, these House members have had a number of fights already in the last, the ones from the 118th conference, certainly, but even within the 119th. So I think it's smart to have him there for Monday night, and hopefully they'll get something done before that. But certainly Tuesday will be where the rubber hits the road down there at that conference.
Well, we had an interesting weekend leading up to this retreat, a 48-hour retreat, we should note. Rick mentioned Colombia. Jeannie, we had like a 5-hour trade war on Sunday. If you were following along, and you might have been watching the Commanders game and missed the whole thing. Or was that an Eagles game? It depends who you talk to, Jeannie. You're from New York. You're agnostic. This has to do with the deportation flights, migrants that Colombia has been receiving. We sent a military plane, and Bogota didn't like the way that these migrants were chained up. You saw images of them boarding these C-17s. And so they didn't want to receive the jet. Donald Trump threatens 25% tariffs to rise to 50 next week. And just like that, Jeannie, magically the whole thing resolved. Did Donald Trump just prove that tariffs work?
Yes, and he's done this before. He did this against Turkey in his first administration, and they buckled rather quickly. And so we will see him use this again and again to, essentially use the stick that he has, which is tariffs, and that does make sense. We deport criminals to other countries all the time under many administrations, and it is seldom that they refuse to take them. But as you increase the number of people that you export to these countries, it's going to be curious to see does one country say no and then stick to it. Obviously, Colombia was not that country. In fact, this moved so quickly, some of us were hearing that Colombia was standing up and saying no while they had already buckled to Trump. So the news cycle couldn't even keep up with how fast this moved. But that doesn't mean it won't happen in the future. And the reality is, we also depend on our allies for other things beyond just accepting these folks that should be returned if they are criminals. And so this is going to be a challenge for the Trump administration going forward, if indeed we see other countries stand up either directly against the threat of tariffs like this, or going forward if they say, you know what, we're not going to assist you in other ways in which you've depending on us, say, for instance, fighting the drug cartels and other things.
Mm-hmm. What do you think about this, Rick? Is this the case study in how to apply at least the threat of a tariff? And did Donald Trump have the leverage in this case? I mean, when it comes to Colombia, why wouldn't they want to receive their own citizens? It seems like Colombia had no leverage in this negotiation.
Yeah, all they had were flowers for the Valentine's Day that they could withhold. Shocking. You might not get your roses. I know that would cause a problem in the Davis household. But the bottom line on it is, we've seen some evidence of this already, right? Whether it was Canada and the threat of this same kind of activity, and then they caved, and then Mexico picked a fight, and that's still going on. So yeah, it's the threat of these kinds of things that Donald Trump has done so well in the past. But it's worth reminding that these are all our allies and partners in so many other initiatives, right? I mean, we know there's China encroachment in South America, and these governments all have, options to associate with us or the Chinese. And frankly, the Chinese play a harder game than we do. They don't mind bribing a few folks to get heavy-duty infrastructure projects under their name, and rarely do our companies even compete based on that kind of a term. So if we want to maintain hegemony over the Western Hemisphere, North and South, I think it's probably a different strategy would be employed than trade threats.
Rick Davis and Jeannie Shanzana will stay with us. In our second hour, we have a lot more to talk about. Honestly, we're just beginning to scratch the surface. We haven't gotten to DeepSeek or confirmations yet. Pete Hegseth walking into the Pentagon today as the new defense secretary, and there's going to be a parade of votes and hearings this week that follow. Scott Bessent likely this evening. But Wednesday and Thursday, the dueling hearings are going to be wild when you consider Tulsi Gabbard, RFK Jr., Kash Patel. We'll have a lot more on that coming up with our panel. Latest on DeepSeek, aforementioned. We'll take a look at the stock market as well today, still under a lot of pressure following this story. The NASDAQ down still 3.5%, almost 700 points. The VIX is up 28 points, now approaching 19. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
DeepSeek sinks the market and poses new questions about Washington's approach to AI. Welcome to the fastest show in politics as we learn more about the Chinese AI app that seems to have defied the odds here when it comes to export controls and spending. I'm Joe Matthew alongside Kaylee Lines in Washington, where we wake up, Kaylee, to a whole new headline today after what was a doozy of a weekend here coming from the Trump White House. Do you have DeepSeek on your phone?
No, But I also have a U.S. phone number, so even if I wanted to, I wouldn't be able to use it right now. Chinese phone numbers only, at least for the time being, due to some breaches that DeepSeek says it has experienced over the last day or so. But obviously, what the market generally is experiencing is not great if you're a technology stock off the back of this. And the White House is taking note. We just heard from David Sachs, who's the AI and crypto czar for this brand new Trump administration. He says DeepSeek R1 shows the AI race will be competitive and that President Trump was right to rescind the Biden executive order, keeping in mind Donald Trump signed his own AI-related executive order last week.
Yeah, that's true. And these are apparently NVIDIA chips. We had a fascinating conversation with Gregory Allen from CSIS in our last hour, talking about what exactly took place here that didn't necessarily defy export controls. This is older technology, and they've managed to spin this in an interesting way here that has a lot of people questioning the sizable investments that we're seeing from the hyperscalers and even the White House itself. Remembering that event with Altman, with Oracle, with SoftBank. Will it always cost this much money, or is this a game changer?
Yeah, keeping in mind the dollar figure they were announcing then was up to $500 billion.
Yes, indeed.
This is not a cheap endeavor as they try to build out AI infrastructure. So we're going to get into all of this hour. We'll check in with Bloomberg's Michael Shepard in just a moment from San Francisco on the technology and policy intersection here. But first, given the market reaction, we got to check with Charlie Pellet up in New York, who has an eye on things. Hey, Charlie.
Well, hello there. Indeed, looking at deep losses because of DeepSync. Right now, we have got the Dow higher, but the S&P, NASDAQ very much in the red. I begin with the NASDAQ Composite Index, now looking at a 3.5% drop. Right now, we've got NASDAQ down 700 points. Again, a decline of 3.5%. To put that decline in perspective, we have got the S&P down 119, 59.81, where the S&P stands right now, up by down by 2%. But trading higher, the Dow up 53, up by just about 0.1%. The 10-year at 4.53%, with the 2-year 4.18%. Spot gold down $36 the ounce, down 1.3%. And West Texas Intermediate crude oil down almost $2 the ounce, down $2 the barrel, 72.70 right now on WTI. That is a drop of 2.6%. Bottom line here, Wall Street having a rough start to the week on concern that a cheaper AI model from Chinese startup DeepSeek could make valuations of the technology that has powered the bull market tough to justify. Among tech names today, we do have NVIDIA plunging 16.5%. Meta, however, reports earnings this week up 0.4%. Apple right now up 3.4%. Tesla is down by 2.5%. Again, recapping, the S&P is down 1.9%. NASDAQ is down 3.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet running us through what is a brutal day for technology stocks, led, of course, by NVIDIA. Thank you so much. Incredible to see NVIDIA more than 300 points of the 700-something points that the NASDAQ 100 is down right now. It's just creating a massive drag, hundreds of billions of dollars in market cap lost. And the question I think a lot of us have is this just the story of a stock who got richly valued, perhaps too much so, and it needed to be pulled back a little bit? Or is this suggesting that there is something of a sea change here with the way in which and the cost with which artificial intelligence and learned language model technology can be deployed? Sure, yeah. If China can do this, what's going on here in the
Absolutely.
U.S.?
It's the whole space. I mean, it's not just NVIDIA. We mentioned Oracle, as Larry Ellison stood in the White House with Donald Trump to talk about this massive investment in AI, down 14%. The energy plays are really interesting too. Constellation down 20%. Look at Vistra down 28%, over $55. This is clearly heavy stuff when it comes to the markets, and some analysts are crying buying opportunity. There's a lot of different ways to look at this, and that's why we wanted to spend some time with our colleague Mike Shepard, who's made his way out to the West Coast. A perfect day to be in San Francisco for all of this, covering the intersection of technology and policy here in Washington. Mike, this is being framed as a sea change here, that this is going to mean a new look at AI, a much potentially smaller number of dollars needed to invest. Are we getting a little over our skis here? How are you looking at it?
Well, Joe, it certainly is prompting all of those questions, and in a very stark fashion. As we can see by the sell-off on Wall Street, this is a moment that is kind of crossing both markets, policymakers in Washington, and the innovators here in Silicon Valley, who are wondering, did we structure our bets and our planning the wrong way? In other words, is the Manhattan Project-style approachment approach of investment and CapEx toward artificial intelligence the right way to go? Can you do it cheaper? Can you do it faster? And I think people need to understand a little bit more about what DeepSeek did, how they did it, what technology they deployed, and also how capable their model really is. It rises high on the artificial intelligence modeling leaderboards that kind of rank different products against one another. But when you actually put it into use, what does that look like too? And the use case scenario has also been something that has been dogging AI stocks for a long time. You know, do they actually have that game-changing, profit-making application that really will justify all that big spending?
Well, so when we consider one of the aspects you were just talking about, Mike, this notion of how exactly did they do this, with what technology, the fact that NVIDIA chips were used here, when there have been in recent years export controls put on the caliber of chips that NVIDIA can actually sell in China to Chinese companies, what does this suggest about the way in which those export controls by this administration may need to be tightened even more so than what the Biden administration implemented?
Well, Kelly, this is a great question. It's one we put to a number of analysts and former U.S. government officials who appeared on our Bloomberg Technology program earlier today. And the consensus is that export controls somehow did not work here. It's unclear why. Is it because they were enacted too late, or were these products that were deployed by DeepSeek to help build these models simply not sophisticated enough to warrant being subject to those controls in the first place? In other words, did the owners and engineers at DeepSeek find a way to use, I guess, more legacy technology to produce something that's far more advanced? And again, that will be something that, you know, the current administration will have to assess. And and we're hearing early on from David Sachs, who's the new czar for AI and crypto under Donald Trump, and he's signaling that you know, the gloves are off when it comes to innovation. But what does that actually mean, and what does that translate to?
Well, you know, and you've got the Washington view on this, Mike. If the gloves are off, and we know that DeepSeek is scooping up Gmail accounts and American phone numbers, how is that any different from TikTok? Is Donald Trump's next move to ban it?
Well, you know, Joe, you raised a great question there, and in a lot of ways, you know, the stories really do converge, because there is not only the data security question you raised, and the other question about, you know, how they managed to catch up so quickly when the U.S. was thought to have such a lead when it comes to AI. But then there is also the third question of how the U.S. responds. And there is where we see the stories diverging perhaps a little bit. You know, we have seen Donald Trump look at TikTok far more favorably than he did during his first term in office. Does this cause a turnabout in his thinking? We haven't heard from him yet. You and I both know that he looks at the stock market as a benchmark of his performance as president. So this cannot be sitting too well with him.
Yeah, it can't be like what he's seeing today, or liking it very much. Bloomberg's Michael Shepard joining us from San Francisco. Thank you so much, and bringing up an excellent point that while we have heard from the AI crypto czar David Sachs, we have yet to hear from the President of the United States. Of course, just a week now into his term, but he is busy today. In fact, he was spending the early portion of today golfing at his Doral Resort down in Florida.
A little morning golf, a little lunch, I guess, at poolside. Did you see there's a 125-foot slide at the pool?
Pretty cool.
Are the members using the slide this weekend? They might have to take the plunge on a couple of things here, Kaylee. This is interesting. As we've talked about one bill or two, what's the agenda going to be? This is apparently the two-day retreat that's going to decide it all.
Yeah, that's what we're referring to here, the Republican conference retreat in Doral, Florida, where Donald Trump will be speaking behind closed doors this evening to lawmakers, potentially outlining the way in which he'd like them to move forward on his legislative agenda. So for more insight on this now, joining us in our Washington, D.C. studio is Sarah Chamberlain. She's president and CEO of the Republican Main Street Partnership. Welcome back to Balance of Power. Sarah, I do wonder what Main Street members are planning to say in return to Donald Trump about the way in which they would advise his legislative agenda be pursued.
Well, the first thing is they are going down the slide. I'm hoping with this tight margin, nobody gets hurt. Fingers crossed.
No pictures coming out.
No pictures. Oh, God, no pictures, please. So some of them have played golf with them. But what they're really advising is, one, they need one bill. and they need to make sure SALT is in it. Immigration is SALT. Immigration will definitely be in it, but they're really pushing SALT. It means a great deal to our California members, New York members, and actually our New Jersey members. So that is one area that they're pushing him hard on.
Got you. So how much of this is pep rally versus negotiation versus productivity? You've got a lot of factions, as we've discussed. In this Republican conference, is it Donald Trump's job to bring them together and so they can come back to Washington to start writing legislation, or to make a deal that they can go home with?
So I think it's really, believe it or not, going to be a combination of both. He is trying to rally them, get them on the same page, have them spend time together, doing fun activities like we already mentioned, and playing some golf. But there is a lot of business that's being discussed as well. You know, the one bill, they need the budget wrecked. I mean, they need to get all these things done by the end of February, and then go into hopefully the one bill. I wasn't sure about one bill or two, but now I'm convinced it's one bill, because I think we are going to have some Democratic help. So one bill, it's a little bit easier for the Democrats to swallow.
Well, so does John Thune need to be part of this retreat as well? It's one thing for House Republicans and the president to be on the same page, but the Senate's the other factor here.
It certainly is, and I know the Speaker is very much in touch with the Senator, so I know he's not there, but I would be surprised if the Speaker's not on the phone with him occasionally this weekend.
Interesting. You just mentioned some of the ingredients here, not the least of which is salt, pun intended, but you've got no tax on tips. We talked to Kevin Brady about this at the end of last week. No tax on overtime. So many different things that would be put into one bill that you start wondering what gets left out. Are we going to have a debt ceiling as part of this? Will emergency funding for wildfires and hurricanes be part of this? Because now we're in a world where there's something for everyone and no one can say no.
That is true. I definitely think the emergency funding will be put into it. Not sure about other things, but this is going to be a massive bill. I mean, there's no doubt about that. It's going to encompass a lot of things that the House, frankly, has needed and needs to get done. So hopefully the Senate, fingers crossed, will go along with some of these initiatives that are in this bill. But the other reason they want it in one bill is because we all know there's some Republicans that do not vote like Republicans, don't really care about what the leadership thinks, and they have to pick some of the Democrats off to get it through, which means you have to put things in the bill that the Democrats want, like the funding for California, fire in North Carolina, and we already talked about SALT. So it's an interesting play here, but it's going to be a huge bill, and there's really nothing you can do about it.
Well, and huge in terms of potential price tag as well when we're thinking of dollar figures. And some of those members you're referring to are people who are very fiscally conservative and want to see requisite spending cuts along with this. Give us an idea of the pay-fors that are actually going to be discussed over the next few days in these rooms.
So the pay-fors, they're going to go through, with Elon Musk's help, go through every single division in the government and see where they can cut. Medicare, Medicaid, I know they've talked about that. Social Security, I don't really see that being viable down at the end. I don't think the members of the Republican Community Partnership would vote for cuts in those three areas. But there is a lot of waste in the federal government. I mean, let's be honest here. So if we can find some of that for offsets, that's where they prefer to go. But we also do know President Trump does not mind debt. I mean, he has it in his personal business. I mean, he doesn't mind debt. I realize there's some Democrats or some Republicans that are really opposed to it, but the president really is not opposed to it. So I think that he'll be comfortable with not finding total offsets.
Called himself the king of debt, if you remember that a couple of years ago.
Did.
Why not get a little more? With that said, then, you start wondering about the calendar. And a very ambitious approach at one point by Mike Johnson. He said he wanted a budget bill up for a vote the end of February. That would require a small miracle at this point, I assume. But what's the realistic timetable here? They have a few months to play with.
They do. They really have until the end of the year.
Yeah.
So, but please, let's not go to the end of the year, please. I think probably March into April is a realistic
in the first
time.
half.
Hopefully in the first half, because there is other business that they need to get out. April, they hope to have something done.
Debt ceiling is part of that?
Debt ceiling is going to have to be. We're running out of money. So unfortunately, it didn't get taken care of last year. I understand that. I actually agreed with President Trump that he wanted to get it done then. So that needs to get done again the first quarter of this year. It's a lot on the table that needs to get done before April.
Well, especially when you consider the Treasury Department already for the last week has been implementing extraordinary measures that only can go so far, potentially to the summer if we're lucky. I do wonder, though, and you refer to what Donald Trump was asking for at the end of last year, if it's going to be just a temporary extension of the debt ceiling for some period of time, or if his suggestion that it should be done away with entirely is something that can become reality.
I know that the Republican Main Street Partnership members would pretty much like it done entirely. I actually, Elizabeth Warren, Senator Warren agrees with us on that, which I don't think has ever happened before. But it would be better for the country, then we wouldn't have to go through this exercise. We always end up increasing it anyway. So it'd be nice to get it off the table. But that's going to have to get done in the next few weeks.
We talk about spending cuts. There are some areas that you've isolated where spending increases could in fact be the case, and the Pentagon's going to be one of them. Rick Davis was the first to mention the first $1 trillion defense budget. Will that be the story in this bill that we're talking about, $1 trillion on the Pentagon?
I think it will be. It's going to be.
Main Street would be behind that?
I think so, at least most of the members. Obviously, one of our members, Ken Calvert, is the appropriator over the Defense Department. But we've given a lot to Ukraine. We have to rebuild what we've given to Ukraine. So that's part of this as well. Plus, we need new technology. I don't know if we're going to fight any more ground wars. It's probably going to be intelligence wars, AI-type wars. So we need to up our game in that area. And then, of course, I know he wants to spend some of the money on the border for the immigration problem.
Well, to that point, how does the Main Street Partnership, how do the members feel about the way in which the border crackdown is going so far? The deportations, we've seen a very small trade war that started and ended, it seemed, over the weekend over the deportation of migrants. Are they happy with everything they're seeing?
They're absolutely happy with it. I mean, immigration is number one issue. I think that's probably why President Trump was able to be elected again, and they want the border cleaned up, and the people in their districts want this border cleaned up. So I think he had a very successful, so far so good on that. And it was kind of interesting to see how he dealt with the president. President kind of caved. President Trump said, okay, we won't send them on military planes, we'll send them on commercial. So I think there was some negotiation there. It worked out, and we'll continue to send them home.
So that's the playbook. Did he prove that tariffs work?
I think he did. I think there's no doubt about it. I mean, they came to the table pretty quickly on that.
Just the threat of a tariff.
Just exactly.
Interesting. Here we are again. Sarah Chamberlain, great to see you. Seems unfair somehow. 75 degrees in Miami, but there's still snow on the ground. But you're here with us. We're lucky for that. My apologies, although we do want pictures of the slide. From the Republican Main Street Partnership, Sarah Chamberlain, one of the most connected Republican voices that will bring you here on this program. When they come back, they're going to have a lot of work to do, Kaylee.
Yeah, and they're going to have to do it in pretty short order. Did you hear, Sarah? Just a matter of weeks to deal with the debt ceiling. Maybe we're not going to push it so close to the X date this time.
You said the two words, extraordinary measures. That's our reality right now. We'll have a lot more with our panel coming up next. Rick Davis and Jeannie Shanzano are with us on the Monday edition of Balance of Power. We're glad you are too. We will check the stock market and bonds as well on the way with Charlie Pellet, of course, reacting to DeepSeek. It's all part of our program today, so stay with us right here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Today's stock rout getting uglier. The Dow higher, but the S&P, NASDAQ, they are both lower right now, with the S&P down 118 points. That is a drop right now of 1.9%. The NASDAQ Composite Index is down 681 points. For NASDAQ, a decline there of 3.4%. The 10-year, 4.53%. The 2-year, 4.19%. Spot gold down $36 the ounce, down 1.3%. West Texas Intermediate crude, $72.90 a barrel, down 2.4%. And Bitcoin now down by 4.9%, 99,457 on Bitcoin. So stocks are moving lower. Nvidia is down 16.7%. Nvidia, the poster child of the AI frenzy, sinking, heading toward the worst market cap loss for a single stock in market history. It is losing the equivalent of the market value of ExxonMobil. Today, we've got stocks selling off as a cheaper AI model from Chinese startup DeepSeek could make valuations of the technology that has powered the bull market tough to justify. Earnings news. AT&T now higher by 6.9%. It reported this morning. And we also heard from SoFi Social Finance lower after earnings by 12%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Rest assured that Washington is taking note of what we're seeing in financial markets today. All of it, of course, precipitated by DeepSeek and concerns over potential cheaper but just as capable technology coming from China, something that the U.S. has been trying to prevent through export controls and other means, and certainly something that is likely to get the attention of this incoming or just brand new Trump administration 1 week in, keeping in mind that the president has signed executive orders within the last few days pertaining to artificial intelligence and announced a near $500 billion AI infrastructure development deal between Oracle and SoftBank and OpenAI, who may now find themselves having to compete with DeepSeek. All of it, of course, in the midst of what has been a flurry of other executive action unrelated to artificial intelligence, but some of it related to new generation technology of another type. Joe, as Bloomberg has learned that today Donald Trump is preparing an executive order to create a next generation defense shield to protect the U.S. against ballistic missiles. This is the U.S. Iron Dome we've long heard him teasing.
Yeah, he talked about this on the campaign trail. He talked about it in his first term. Not sure how that would work. We're talking about a much larger area
3.8
we would need to defend.
square miles.
Yeah, you know, this isn't. It's not a real dome. We actually need to send missiles up. You've seen this in use in the skies over Israel. Would require uncounted numbers of ground-to-air missiles, interceptors, essentially, and would be a boon for defense contractors like Raytheon if it were to happen.
Well, and the newly minted defense secretary, Pete Hegseth, seems on board. When he arrived at the Pentagon for his first real day of work in that job, he talked about this idea as well as some other initiatives now that he, thanks to J.D. Vance casting the tie-breaking vote, has been able to take over as the helm of that department.
That was the moment, late Friday, J.D. Vance in the motorcade to cast the deciding vote that made, indeed, Pete Hegseth the new Secretary of Defense. If you're with us on Bloomberg TV or on YouTube, you see his arrival there at the Pentagon a bit earlier today, a chilly Monday morning in Washington in January, and that's where we start. With our signature panel, Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. She is Democratic analyst and political science professor at Iona University. Rick is Republican strategist and partner at Stone Court Capital. Jeannie, what does it tell you when J.D. Vance has to cast the deciding vote on such an important appointment?
It tells us that, you know, the margin that they're working with in the Senate is very slim. And I think many of us thought that perhaps McConnell would go no only if there was a fourth no. But that's not what he did. He went no regardless of that. And so that means that, in my mind, at least, questions not only about Trump's upcoming nominations, who are controversial, like Gabbard and RFK Jr. this week and Kash Patel, but also Trump's agenda. Does Mitch McConnell turn out to be, I don't know, the new Lisa Murkowski or Susan Collins or Joe Manchin on the Democratic side, who's willing to stand up and say no to Donald Trump? And that is going to mean that Donald Trump's either going to have to pull some Democrats, which is unlikely if he's lost Murkowski, Collins, and of course McConnell, or is he going to play ball with McConnell on things he cares about, like national security and also Senate rules? So there is a lot that this portends, and we just don't know how it's going to play out.
Well, and we also don't know how things will go down in committee on Thursday when Tulsi Gabbard, who Jeannie just mentioned, Rick, will have her confirmation hearing, knowing she's faced a great deal of scrutiny for past behaviors, including a visit to Syria some years ago. This is actually something that Senator Lindsey Graham, Republican senator, I would add, spoke about on Meet the Press yesterday.
I tend to vote for almost everybody at both parties, but I want to see how the hearing goes. Why did you go to Syria? What did you do regarding Assad? Why do you think Edward Snowden should be held as a hero? I certainly don't. We'll see how the hearing goes, but in her favor, Richard Burr is going to introduce her, and he's one of my dearest friends, so we'll see.
Rick, there's a few questions I could ask you around this. One being just how you view Tulsi Gabbard's prospects right now ahead of this hearing. The other being, what impact will the shepherding of Richard Burr have for her?
Yeah, I think, first of all, you've got a pretty compliant Republican caucus. Someone told me over the weekend when these votes were being taken that there are a lot of senators, Republican senators, think they're John McCain, but they act like Tom Tillis. And that is kind of a, way to think about it. They think they're going to be tough. They think they're going to run these people through their marks, and then what they wind up doing is going along with the president. In some cases, it's re-election fear. Some cases, it's not worth the agony to be set up. In some cases, they have other priorities that they want to get done. I mean, the Lindsey Graham comments are really instructive. Lindsey Graham does usually vote favorably for both Republican and Democratic senators, judges, you name it. He thinks that's the president's prerogative, and a lot of senators feel that way. They would have to have something extraordinary. And to march in a former senator who was the chairman of the Intelligence Committee and who was well-liked amongst the caucus members to introduce Tulsi Gabbard, smart move. He's got nothing to lose. He could do whatever he wants to do with his free time, and he chooses to come back to D.C. and front for her nomination. Look, I mean, I think as we've just recounted, there are 3 consistent votes against people who probably shouldn't be in these jobs. The question is, who's that 4th person? And that, I think, is really hard to figure out.
Interesting. We weren't supposed to know about Richard Burr. I guess Lindsey Graham let that slip, so that must have been an interesting moment for Richard Burr, who will be, not only walking her around and doing the meetings and so forth, I guess introducing her before the confirmation hearing, Jeannie, but Richard Burr, of course, this is a former chair of the Intelligence Committee, has been offering advice and counsel in recent weeks here. Will he improve her chances of being confirmed?
I think he will. Certainly he knows how this is going to play out for her in the hearing. He knows what to tell her to watch out for. And we heard Tom Cotton on Fox News over the weekend saying essentially that she is going to have a fair hearing. But it's interesting when you hear that, because what he is saying is, I'll guarantee the process, but not the outcome, which suggests that there may be a 4th no out there somewhere, if not more. Tulsi Gabbard is the one who's most likely to go down, although historically, once you get to the hearing, that's not something that usually happens. And it's all the issues that Kayleigh mentioned, and then it's her flip-flopping on 702, which has been troubling to many on particularly the Republican side. So this is somebody who we're going to have to watch for, along with, of course, Kash Patel this week. And of course, there's other hearings as well, including RFK Jr. And those are the 3 sort of most controversial that Trump has nominated.
Well, but when we consider the president, Jeannie, fresh off what ultimately, though hard fought, was a victory in getting Pete Hegseth confirmed, then maybe the shortest ever trade war between the U.S. and Colombia to make sure that migrants could be deported back to that country on military aircraft through threat of tariffs, and the Colombian president quickly agreed to Trump's terms, we understand. Is this not a lesson that Donald Trump, by and large, is getting what he wants, at least for now? Why would we believe that there is going to be an exception to that rule so early in this term?
Yeah, I wouldn't suggest that we know she's going to go down. I think the thinking is she's the most vulnerable of those left. That doesn't mean by any stretch of the imagination she goes down. And Donald Trump is having a very good first week. But let's not forget what just happened. And you were just talking about the Chinese came out and they shot a gun over the bow. There is no question on the timing here of the Chinese coming out with all of this information on DeepSeek, not just how much it cost, but what was involved in the creation. That is a warning that Donald Trump's smooth sailing may not be so smooth around the world, that this competition is very real. So yes, he's got some important short-term wins here, but it is not going to be smooth sailing. It never is for the president.
I keep asking Rick on this DeepSeek matter, why not, if you're Donald Trump, why not just ban it if it's scooping up Gmail accounts and phone numbers of Americans, or would that make it more difficult for him to rationalize keeping TikTok around?
Yeah, well, he could always flip-flop on TikTok again, right? I mean, like, why don't we just come to agreement that these pernicious kind of businesses that are really sponsored by the Chinese Communist Party and are collecting enormous amount of data on everything we do in our lives should not be allowed to prosper in the United States. It's nuts. And I think that if you have consistency in the administration, you'd look at this and many of these other apps that are people flocking to outside of TikTok, and you'd shut them down immediately. And why give access to our data and our information when we don't have reciprocity in China? Simply put, forget all the national security implications, which are not insignificant. Donald Trump wants to make it tough for countries that don't allow our businesses to prosper in their markets. China's the worst offender. Go after them first.
Well, Rick, when we look at what's happening in the markets today, the NASDAQ 100 now down 3.3%. NVIDIA obviously is creating a massive drag over the implications for that company. But are you surprised? Because I'm a little surprised that we haven't heard from Donald Trump about this yet, knowing how he likes to use the stock market as a barometer for how he himself is doing as president.
Well, he hasn't put it out yet. So, I mean, maybe we'll hear from him later this afternoon. Yeah, I wouldn't be surprised that we get a Truth Social post, even while he's still on the golf course before the dinner tonight with Republican leadership, that says something, gives the country some indication of where his mind is, because it has been doing the wander a little bit on this issue. And we'd like to see it wander back to some place that has strategic value to the United States.
All right, Rick Davis and Jeannie Shanzano, our signature political panel. Thank you so much, as always, for joining us here on Balance of Power as we watch all things policy and politics, but also, of course, Joe, the financial markets, which are having a day today, to see the least. As I mentioned, NVIDIA right now getting hammered down nearly 17 percentage points. Worst day since June of last year. Hundreds of billions of dollars in market cap just eviscerated over a concern about what this DeepSeek emergence will mean for NVIDIA's business.
So I think the chart could be broken in just a day like that. It's through the 50-day, the 100-day, the 200-day, all on one headline. Essentially, the energy plays tied to AI are sharply lower as well. We'll have an update on the market ahead from Charlie Pellet in New York. So do stay with us here on the fastest show in politics. Alongside Kaylee Lines, I'm Joe Matthew, and it's just Monday. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Wall Street's having a tough start to the new trading week. Stocks are selling off on concern that a cheaper artificial intelligence model from Chinese startup DeepSeek could make valuations of the technology that has powered the bull market tough to justify. The S&P right now is down 112 points, down 1.9%. We've got NASDAQ lower by 658 points for the NASDAQ Composite Index, a drop right now of 3.3%. Russell 2000 Index of small cap shares down 1.2%. The 10-year 4.53%, with the 2-year currently yielding 4.19%. Gold down $33 the ounce, lower by 1.2%. West Texas Intermediate crude, $72.86 a barrel, down 2.4%. And a steep drop today for Bitcoin, now down 5%, 99,310 on Bitcoin. Today's DeepSeek news, putting a spotlight on AI chip producer NVIDIA. NVIDIA shares, they are plunging now by 16%. Among some of the tech names reporting earnings this week, Meta Platforms up 0.4%, Apple up 3.9%, and Tesla lower now by 2.5%. So again, recapping, S&P 500 index down 112 points, a drop of 1.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with the heavy lift on the markets today. It's been tough news here as we watch the reaction to DeepSeek from our perch in Washington. We'll get back with Charlie on the markets a little bit later on, as we always do here on Balance of Power. Thank you for being with us here on the Monday edition. I'm Joe Matthew alongside Kaylee Lyons. DeepSeek, my goodness, it's not just NVIDIA. When you look across the board, remembering Oracle and its investment, Larry Ellison standing there with Donald Trump less than a week ago to talk about at least $100 billion investment in AI. Oracle down 15%. The energy plays like Constellation and Vistra sharply lower here. As we ask the question, should it really be this expensive and this difficult to create these models?
Well, and that's what DeepSeek is really raising here. Can this be done more cheaply and with lower quality technology, or at least less advanced technology than others are using, considering that there are controls already in place on exports from U.S. companies or from other companies like NVIDIA into China. And yet DeepSeek was able to do what it has done here. So we want to get into this with Dan Flatley, who covers national security for us here at Bloomberg. He's around the table with us in our D.C. studio. Dan, when we consider the fact that DeepSeek seems to have been able to pull this off, just like Huawei was able to pull off with their smartphone, something that we didn't think would be possible with export controls, does it show that it's working or just not, or it's not working, or that it's just not working as well as intended, that there are ways around what the U.S. is doing?
Well, I think when you talk about export controls or anything in the sort of sanctions space, or something that is trying to basically constrain another country's ability to innovate and sort of keep up with the U.S., it's a very tricky proposition just to start with. So I think what we've seen with China repeatedly is that obviously they're very resourceful. They have a deep pool of talent in their country, and they've been able to sort of replicate the performance of a lot of our cutting edge technology by simply just using more of not the cutting edge chips that we're using, but the the previous generation behind that. And that's a very interesting model. And Kaylee, as you mentioned, I think the question really is expense. And so, we've NVIDIA and a lot of these software companies and chip companies are really talking about outlaying, millions, if not billions of dollars to build these AI centers, to build chip fabrication facilities in the U.S. And all of this money that's being spent in part, with government assistance in order to sort of lead in the AI race. And I think what this is really a moment where people are saying, is it worth it? Do we really need to spend that much money? I suspect that the answer will come in bits and pieces over the next several days, weeks, and months when we find out how exactly was China able to do this? how were they able to replicate the performance in DeepSeek that we have attempted to do, or the U.S. has attempted to do with some of these more advanced technologies and chips, and what is the Trump administration planning to do, if anything, in order to kind of further ramp up chip restrictions and export controls. So I think that it's early days, but it really does underscore how much this is an AI-centric market.
Yeah.
And so this is really the technology of now and into the future.
The Huawei comparison is interesting, and it's one that Gregory Allen from CSIS drew a bit earlier today, the AI expert there at the Wadhwani AI Center. He says these attacks are not, in fact, attacks that crippled the service, that it didn't have the computing power to keep up with demand, that it wasn't fully baked when this product was released, not unlike the Huawei phone. Do you see that analogy being true?
Yeah, it's interesting. There's been a lot of discussion around DC over the last week or two about artificial intelligence and where this is all going. And the sense is that, if you have a chip that is good enough, or a capability that is good enough, you can basically perform a lot of the functions that the cutting edge technology can do in most day-to-day activities, right? So the Pentagon, for instance, is worried about Chinese semiconductors in the F-35, and they're worried about Chinese software or chips or things of that nature in their supply chain. So those are good enough chips that are good enough to do the jobs that we require of them today. When you get to the bleeding edge of this type of thing, stuff is not fully developed typically. You have prototypes, you have things that are sort of still being developed. The airplane is sort of being built as it's in motion. And I suspect that what we'll find, not just with DeepSeek, but also some of the cutting edge US technology, is that there are some gaps, some holes, some vulnerabilities. And the more attention that is on these types of platforms and models, the more they are a target for attacks, and the more they are sort of the vulnerabilities become exposed. So we may find, as I said earlier, in the coming days, that DeepSeek may not be as fully developed as the Chinese government would like us to believe, or it may be even more fully developed. I think that it's just one of these things that there's still a lot of questions.
Well, as you mentioned, the Chinese government here, what's to stop this administration from saying, okay, this is a Chinese-controlled application that's suddenly #1 on the App Store, everyone's trying to download it, exposing potentially their data to be released to the Chinese government? Why not invoke national security risk a la TikTok and say, nope, this thing's not operating in the U.S.?
I mean, it's absolutely on the table. I mean, we've seen this with TikTok, although that decision is somewhat in jeopardy.
Trump feels differently about that now.
Yes. So, I mean, all of these things are negotiable up to a certain point. But you bring up a good point, Kaylee, which is the sort of national securitization of everything. So here we are talking about national security and tech policy. And part of it is sort of a natural progression of the way that the government has gotten involved in this space over the last several years. And part of it is just the fact that we're talking about such an important technology, not just for the future of commerce and how people relate to each other, social media, whatnot, but also for the future of defense. And so I think that there is potentially a national security rationale for cracking down on the availability of these models here in the U.S. But China may do that anyway, as we've seen with DeepSeek. They've restricted it themselves.
Chinese phone numbers only.
Yeah. So, there's going to be nation-state involvement in this one way or another, and it's sort of, as somebody put it to me recently, corporations are really the cutting edge in defense technology these days, and they're really advancing. They're really pushing the envelope on a lot of that stuff, and so you get into this area where our tools that we have in the U.S., sanctions, export controls, and things of that nature, sophisticated enough, well-developed enough, used in the correct manner in order to actually be effective here without restricting commerce, which is always a tricky balance to strike. So
to the extent that they're enforceable as well, Dan, we had the order, the most recent one from the Biden administration. By the way, that was only like 2 weeks ago. It went out on a weekend, and it chose 18 countries that we were cleared to do business with. That left a lot of friends off the list to begin with, but also the extent to which these 18 countries are not porous and are not passing along technology to China. How is that enforceable?
Well, I was just talking to somebody recently today who made the point that, if the money is right, the product will move. And, there's a little bit different. Export controls are a little bit different, as you know, Joe, than sanctions, which, kind of leverage the power and the prestige and the attractiveness of the U.S. financial system to the U.S.'s national security advantage or foreign policy advantage. With export controls, you're talking about trying to restrict I don't want to call it a commodity necessarily because it is a product that people want and they're willing to pay for it. And you need to have very stringent and sophisticated export control measures in place at those, you mentioned 18 countries, at those countries, where they're selling onto. So there's a whole active debate within the government about how far down the supply chain does the U.S. government reach?
These are big questions, Dan. It's great to spend time with you, as always, from our national security team in Washington. Dan Flatley with us here on Balance of Power. In our remaining moments, Kaylee, we want to add the voice of an expert. Michael Zizas is with us, Global Head of Fixed Income Research, Public Policy Strategy at Morgan Stanley, as we consider the global impact here of the technologies that we're talking about here in a time that Donald Trump is staging hours-long trade battles on a Sunday afternoon. Michael, it's great to have you with us. Dan was talking about the national securitization of everything. A story like this reminds us of it today. Is this White House up for it?
Yeah, well, I think that's exactly the right way to think about it. And there's going to be an element of kind of economic policy being used for leverage national security policy across a variety of geographies, right? So I think when we're talking about, for example, tariff policy, which is something that rates investors, foreign exchange investors, everyone is heavily attuned to, you have to think about how the White House is developing kind of real-time optionality across geographies, across regions that they can kind of bring to bear in any type of discussion, whether it be on technological cooperation or national security matters or anything else. And so while we think it's going to be a while before you start to see a real broadening and more aggressive tariff policy on China, markets are going to have to live with the real-time possibility of these events that can create kind of stagflationary shocks in the near term.
Well, why, Michael, do you think it will be a while before we could see tariffs on China like that, considering Donald Trump was pretty quick to say, all right, 25% tariff on everything coming from Colombia, unless you do what I'd like you to? What did we learn this weekend about the way in which he's going to use tariffs as leverage?
Yeah, I mean, I think when it comes to a place like Colombia, there was a very specific conflict that he was trying to solve with regard to migrants. With China, there appears to be a more comprehensive discussion on the offing, and Trump, I think, has hinted himself at some of these inclinations, which is to say, I'd like to have more of a discussion. He's talked about trying to meet with China formally in the first 100 days. And so, and of course, it's a much more important trading partner. And the way Trump's advisors have talked about tariffing China is to set it on a path to happen gradually in order to kind of help the American economy adjust to that reality. So I think there's a number of considerations where we probably end up on a path to higher tariffs with China, but you don't need to do it immediately. And perhaps there's a discussion to be had beforehand. Again, I don't think China will be able to meet the bar for what the U.S. wants from that trade relationship to avoid higher tariffs, but there's probably some time to explore that first.
So was Colombia the playbook then, what we saw yesterday? It's not about even implementing across-the-board tariffs. It's just about showing up at the table with a big stick.
I think there's some truth to that. Yeah, I think what the administration is really trying to do, if you look at that America First trade policy, instead of implementing a series of tariffs immediately, basically instructed the whole of government, go out and study the various ways that we can develop trade authority that can be used across geographies, across products, and when the president wants. And when you have that in hand, then of course it can infuse any negotiation on any topic. So I think that's the takeaway from Colombia, as opposed to there being a more specific or sort of grand strategy that's going to apply globally to everyone.
We just have a minute left here, Michael, and you'll have to come back and join us for a larger conversation. But we're obviously seeing a massive bid into the bond market today over concern about everything emanating from DeepSeek after we've been experiencing a lot of pressure in the bond market because of concern around tariffs and other measures leading to more persistent inflation. You also head up fixed income. Where do you come down on this?
Yeah, listen, I think that some of the tariff stuff we talked about obviously creates potential for growth downdraft into next year. And the other policy area that's perhaps getting a little less airtime, as my colleague or Chief U.S. Economist Michael Gapin talks about, is on immigration. So one of the things that we think leads to slower potential growth in 2026 is the decrease in labor force contribution from immigration. You've seen some of these actions on deportations and removals pick up steam over the last week or so. So I think that's going to be an important narrative pushing bond yields lower.
All right, Michael Zizas of Morgan Stanley, thank you so much for joining us here on Balance of Power as we work through the policy and market reaction to DeepSeek. They'll have more ahead on that on Bloomberg Business Week in just a few moments, and we'll be back for more in the late edition of Balance of Power at 5 p.m. Eastern, right here on Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week for this Monday, January 27th. We are getting ready to wrap up the month of January this week, but man, we're not going to do so without talking a lot about the tech trade, certainly on this Monday.
Yeah, the NASDAQ 100 down 3.5% as we speak. We actually have the Dow higher by 0.3%, the S&P down 1.9%, the NASDAQ composite down 3.5%. Carol,
yeah,
it's the AI trade, and it's getting hammered today.
It's pretty amazing, right? And you mentioned some of those that are most exposed or most talked about when it comes to the AI trade. Having said that, I'm looking at the S&P 500, folks, and most of the names, 319 to be exact, are actually gaining in today's session. So it's not like it's a complete rout or a complete sell-off. So we're going to talk about that, but we're also going to talk about DeepSeek a lot. It is dominating the Bloomberg terminal. If you look at the most read stories on this Monday, we're going to get into what it is, what you need to know, what we know, and what we still don't know, because I feel like, Tim, there's a fair amount of questions out there.
Yeah, look, I do think, people who were in the know knew about this company and knew about this startup over the last few months, especially over the last few weeks. But I think for a lot of investors, perhaps they woke up this morning learning about this company. So we're going to go all in on it. Speaking of AI, the key Trump advisor who is not on board with the Stargate announcement and a big AI infrastructure spend of last week, guess who it is? It's Elon Musk. And yes, it's complicated.
All right, we're going to get into that. Speaking of AI, we're going to get into the key Trump advisor who is not on board when it comes to Stargate. As you just said, we're going to talk about that a lot because I just feel like it's kind of been amazing over the last week or so how much we've been talking about AI coming out of the administration, announcements, promises of spend, the Elon factor. So we're going to talk about all of that. Plus, we're also going to get to some news out of D.C. Over the weekend, it was kind of a late night drop on Friday, and that has to do with inspector generals. We got to keep a watch on what's coming out of the nation's capital. A bunch of them, according to numerous sources, getting let go. So what that means, what you need to know about that, all to come over the next 60 minutes.
All that and more ahead. First up, though, checking the day's trade and top business stories. Here he is, Charlie.
Hi, thank you very much. And here's what's going on. We've got deep losses because of DeepSeek. We've got the S&P 500 index down now by 1.8%. The real damage, though, Techland, with the NASDAQ Composite Index down 3.5%. The NASDAQ 100 Index right now down by 3.4%. 10-year 4.53%, with the 2-year currently yielding 4.19%. Spot gold down $33 the ounce, down 1.2%. West Texas Intermediate crude down 2.3%, 72.97 a barrel on WTI. Cannot ignore the move to the downside for Bitcoin right now, down an even 5%, below $100,000, 99,348 right now on Bitcoin. Nvidia's plunge, fueled by investor concern about Chinese AI startup DeepSeek, has erased a record amount of stock market value from the world's largest company. Nvidia shares now lower by 17.5%. The decline has erased roughly $560 billion from the company's market capitalization. Again, Nvidia down 17.5%. Our Mandeep Singh is going to have a whole lot more on Nvidia and the sell-off today coming up in just a moment. Recapping, S&P right now down 1.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Do want to remind everybody, too, also coming this hour, don't forget, we've got a Fed meeting, our first Fed decision of 2025, so we're going to tackle that a little bit later on. Charlie teed up our first guest. He's part of the family, Mandeep Singh. He doesn't know, but we're not going to let him go for 60 minutes because there's so much to talk about when it comes to DeepSeek. We want to get into it. As you know, it's the Chinese artificial intelligence startup, DeepSeek, their latest model, AI model, sparking a $1 trillion rout in U.S. and European technology stocks. We have been seeing this AI shot play around the globe on this Monday. A lot of questions, though, about maybe valuations here in the United States, but what it really means in the AI race. So let's get to it. Mandeep is Bloomberg Intelligence Senior Tech Industry Analyst. Mandeep Singh, he's here in studio. You've been up early. We've been listening to you, both Tim and I, throughout the day. Why is this all happening? Because for your world, you guys, this has been on your radar, but why is it all of a sudden on our radar, and why should we care or shouldn't we care?
Well, every company has been talking about how CapEx needs to go up because they believe in scaling laws. I think what this development has shown is the hardware that these companies have procured they weren't using it efficiently. And literally, it's both on the training side as well as the inferencing of the models when it comes to using it in chatbots and so on. And that's where I think you have to ask yourself as an investor, are you ready to pay up for these companies when they are, increasing their capex, when we know they are not running it efficiently? So I think a lot of questions around just the efficiency of the hardware. I mean, the scaling will continue just because there is more demand to incorporate AI. But the fact that, this model does it so much more efficiently, I think raise a lot of questions.
Does it show that DeepSeek is actually ahead of OpenAI, of Anthropic, of Llama at Facebook?
No, in fact, they are using the output of OpenAI and Anthropic and Llama to train their own models. So think about this. DeepSeek didn't, train this model from scratch the way OpenAI did. They used output from OpenAI's models to train its own model. So in effect, they are paying OpenAI, for all the API calls, but then they didn't have to do things from scratch. And that's where, if you are a Meta Llama who has invested billions of dollars in creating Llama model, what was their incentive to open source it to begin with? Because open sourcing it made it easy for someone like DeepSeek to build their own model. And that's the thing about open source is you lose your IP, someone else can come up with a better approach to do things more efficiently, and suddenly everyone runs to them.
Mandeep, is this like the Apple Store? You don't have to be first, you just have to be better? Like I'm thinking about like creating a smartphone.
I wouldn't compare them to Apple yet. I mean, they'll have their problem when it comes to distributing this model. There's no way I can see, DeepSeek getting to the adoption of OpenAI, especially here in the US. But at the same time, you have to give them credit for, just being novel in terms of, the limited GPUs they had and how they ended up using them.
Do you trust the information, the research, and do you trust that what they say they did do?
Probably not if they are saying $6 million for training their entire model. I don't trust it because when I look at OpenAI costs for training their, GPT-4 model, it was close to $300 million. So we are talking about a 50x gap. Now, even if OpenAI wasn't very efficient, I don't buy the 50x gap. So clearly, there is something that they are not counting when they, release the paper. But at the same time, they've given us enough evidence to show that they are doing things much more efficiently on the hardware side because of the constraints they had.
Mandeep, I know you don't cover NVIDIA, and we're going to be speaking to Ian King in just a few minutes, who's been covering NVIDIA in the chip space for years. But we can't ignore that NVIDIA is down close to 18% right now. I mean, it's shed almost a fifth of its value in a just a day. Yes, the run-up over the last couple of years has been immense, but a day like today is just mind-boggling, I think, for a lot of people. Should NVIDIA, in your view, be worried?
I mean, look, that's where a lot of the questions come, is the cost for training the next model. So if DeepSeek is saying that the cost was $6 million, I think NVIDIA should be really worried. But a lot of people are apprehensive of that $6 million number because they think it'll be higher. And it won't be $300 million the way OpenAI's was, but it will be higher. And that's where I think OpenAI or Anthropic will have a very tough time selling to their investors that they need to build a 1 million GPU cluster to train the next version of their model.
Mandeep, does this show that even though the U.S. has been pretty rough in terms of restricting advanced technology going over to China, does this show that Chinese R&D and Chinese companies can be pretty scrappy and pretty smart in maybe figuring a go around and coming up with their own way of competing against NVIDIA and the like?
Yeah, and look, I think this could be another way of them saying, look, we are open sourcing whatever we have learned so far. So they want to build a community because the export restrictions aren't going away.
Yeah.
So they are not going to get the, Blackwell chips on paper and all the other allocation. And the thing about model training is it's continuous. It's not a one and done thing. So you have to continuously improve your model. The other labs will go ahead if they're not able to, keep doing the training and all the other stuff that other labs are doing. So from that perspective, I think the whole aspect of community building is front and center here.
Yeah.
But I still think the cost parity is a very big concept here.
Hey, before we let you go, Mandeep,
Yeah.
you do cover Meta Platforms. The company out on Friday, Mark Zuckerberg saying he was going to be spending more on CapEx than previously announced. Then the stock moved higher on Friday. Stock was lower earlier in the session, but higher now. I mean, I look at a move like that today, and that runs counterintuitive to kind of everything we're talking about.
Look, there is a lot of confusion, but if there's one thing that happened today is this moment is good for open source. And Meta Llama is an open source model. So if anything, open source does get a nod when it comes to, what DeepSeek is touting here.
But you do also think about if it's cheaper for companies to build out, then does everybody have to rely on some of the bigger players? Maybe not.
Next time, Meta Llama will collect a fee from DeepSeek for, using their model to train their own models. So that could be a positive.
Love this world that keeps us on our toes. Mandeep Singh keeps us, though, on the straight and narrow. He's Bloomberg Intelligence Senior Tech Industry Analyst here and has been all over this story. We want to focus a little bit more on semiconductors because we have seen that group really taking a beating. You've got almost all 30 names, 28 out of 30 down in the Philadelphia Semiconductor Index, down about 10%. The index as a whole. NVIDIA is down 17%. So ouch. What does this mean for NVIDIA specifically? We get to now Bloomberg News U.S. Semiconductor and Networking reporter Ian King. He's out there in San Francisco. I don't know, Ian, how we've all been talking about this nonstop today. You're the expert. How are you thinking about NVIDIA and possible impact, the reality of it all? How do you see it?
Yeah, I mean, a lot depends upon how much reality there actually is behind this claim, behind, it was a very well set out, well referenced research paper at this point, and the model has been open sourced, and we'll see what people can do with it. The implication is, of course, that things got cheaper, things got more simple. But we'll have to see that manifest itself in the real world. And then, obviously, you can absolutely bet that NVIDIA and a lot of other computer scientists at some of the most powerful companies in the world are looking at this right now, working on this. For some of them, this would be great news. For others, it would be a disaster. So they'll be definitely testing out the veracity of this. And I think the actual where the truth lies will emerge with a bit more time.
Ian, what do you make of sell-offs in other names today? Broadcom, for example, Marvell. I mean, everybody is getting hit in the sector, as Carol mentioned. 28 of 30 names lower.
I mean, the logic is absolutely clear, right? I mean, if you are no longer a believer in this exponential growth in spending, in this exponential need for more and more computing, then you're going to sell Micron, you're going to sell Broadcom, you're going to sell Marvell, and of course you're going to sell NVIDIA. All the logic based upon an assumption, and that's what it is at this point, is flawless. I mean, for example, Broadcom, they are the key ingredient in terms of these companies like Google that are now designing their own chips for this type of purpose. So if there's going to be less need for that kind of high-end chip, then it makes sense to sell them.
I mean, none of this happens in a vacuum, right? So I can only imagine the meetings that are happening at NVIDIA today and all of the chip companies. So would you expect them to, tear apart the research from this company and try to understand exactly what they did and then come back with their own response?
They've got to do that, right? I mean, if this was a 2 or 3% move and a few market jitters, then you probably as a management team, you look into it fiercely, but you just keep your mouth shut. But we're just about to go into earnings season, right? So whether they like it or not, for example, Intel on Thursday are trying to get into this market. They're going to get asked about this. What have you got? How can you deal with this? Is this good for you? These are all questions that I think, everybody's companies are going to be answering over the next 2 or 3 weeks, and they better have some good answers.
Ian, do folks you speak to who are covering the industry, have they been waiting for a day like today? Was this bound to happen?
Investors do two things, right? You have different types of investors, but basic pattern recognition is supposed to be the skill that everybody can bring to this, whether you're technical or whether you're just a general investor. So I think a lot of the general investors will be like, let's not be on the wrong side of what happened in 2000 with all of the internet sell-off. Let's get out right now, right? Maybe we're at the peak. More sort of technically savvy investors will probably take their time, look at this, and try to find out just how much truth there is there and just how many concrete implications there are.
Well, in terms of implications too, a lot of what's been kicked around throughout the day is, I feel like TikTok, version 2.0. In other words, another Chinese company, you want to know how much the government is involved and how much maybe, did they support the R&D? CFIUS from the United States, the Committee on Foreign Investment in the United States, are they going to weigh in on this, whether or not, American companies or, can tap into it? I mean, it's a whole other round of this, it seems.
And clearly there's a lot of scrambling going on, and the path that's happened so far in that particular area has been to restrict access to these high-end chips. So guess what? The country that is restricted from these high-end chips suddenly comes up with a magic bullet solution, which says maybe we don't need as many of these high-end chips, or maybe we don't need them at all. So there is an element of like, okay, is this the answer that they want us to be concerned about, or is this really the answer, or have we given them so much incentive to find a way around it that they've poured all their energy into it, been really smart and got around it? I mean, layers upon layers of things going on here. But in general, there are no magic bullets in at least the chip industry. It tends to be a pretty incremental industry where we see changes over time. Software can be more volatile and is prone to more kind of instant changes in thinking. But even then, the change to a whole industry, the direction that's going in, it's a little bit hard to imagine that one morning we all wake up and go, oh dear, right? But at the same time, if you're an investor, you can't afford to ignore the possibility. And if you're the CEO of NVIDIA or the board of NVIDIA or the senior management of NVIDIA, you cannot afford to ignore the possibility.
Ian, on a day like today, we're certainly focused on the big names that are moving lower by double digits. NVIDIA certainly down. Broadcom is lower today. Oracle's down by 14%. But from a hardware perspective and from DeepSeek's perspective, what do you know about the hardware that DeepSeek uses to train its models?
And that's a very good question. That's probably one that the U.S. government are looking into, which is, some of the analysis that we've seen has been like, look, yes, this model that they're citing, but it's actually a derivative of another model. How did they train that original model? So should we classify this derivative model that they're offering up as part of this larger equation, which they must have developed with Western technology? And the simple answer is we do not know, and there's going to be a lot of pressure on, those that need to know and should know to find that out. And I think we're going to see a lot of reporting emerge. We're going to see the government looking into this to find out what did they have access to, should they have had access to it. If what they had access to was in fact more efficient computing than what, say, Microsoft is putting in place, then wow, here we go, right? This is a breakthrough. So many layers to this onion, and that's not a very useful conclusion, but I think it's the best that we can offer at this particular point.
A lot of questions still out there. Ian, thank you so much. So appreciated. Of course, our Bloomberg News U.S. semiconductor and networking reporter. Coming up, we're going to shift gears, talk a little bit about the Fed decision, but you've got the S&P right now down 1.7%. The NASDAQ 100, a decline of 3.3%. The NASDAQ 100 down the most since December of last year. We're coming up. We continue on Business Week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A rough start to the new trading week for Wall Street. Stocks lower on concern that a cheap artificial intelligence model from Chinese startup DeepSeek could make valuations of the technology that has powered the bull market tough to justify. S&P 500 index just below 6,000, down 104 points now, down 1.7%. NASDAQ is down 660. That is a decline for the NASDAQ Composite Index of 3.3%. The NASDAQ 100 Index now down 3.2%. 10-year at 4.53%. The 2-year 4.20%. Spot gold up $30 the ounce, rather lower $30 the ounce. Right now we've got gold down 1.1%, $27.39 the ounce. West Texas Intermediate crude down 2%, $73.13 a barrel. And Bitcoin now down 4.8%, 99,500 on Bitcoin. Walgreens Boots Alliance shares are lower after a CNBC report that a potential take-private deal with Sycamore Partners is unlikely. Shares of Walgreens Boots Alliance down now by 6.6%. Rival CVS up by 2.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much for the update. Carol Massar along with Tim Stanovic live here on Bloomberg Business Week. Feels like the last week or so, topped off by today's news on DeepSeek, has put the AI story once again, Tim, front and center in a super big way.
Yeah, remember just last week, President Trump and a group of tech companies, SoftBank, Oracle, and OpenAI, initially planning to invest $100 billion to build U.S.-based infrastructure, including data centers for OpenAI. The project we know called Stargate. On that, though, one very high-profile tech and administration voice who's not all in on it. It's something that Bloomberg Businessweek columnist Max Chafkin gets into in his latest story and in the latest Bloomberg Businessweek daily newsletter. You can read Max's Businessweek story on the Bloomberg and at Bloomberg.com/Businessweek. Max, the co-host of the Elon Inc. podcast, also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. Max, we're going to talk about Elon, Stargate in just a second, but DeepSeek is where I want to start because it's what's hitting the tech names today. Well, I don't want to say all tech names. It's what's hitting, NVIDIA, Broadcom, and some of the other chip names in a big way today. How are you looking at it?
Absolutely. Well, as you're hinting at with this discussion of Stargate, until basically this weekend, AI infrastructure was seen as the end-all, be-all. They were talking about not 100 billion, 500 billion, right? And at times, Sam Altman has said he's gonna need $7 trillion in funding for AI infrastructure. And there's been this sense, especially among Google, OpenAI, a bunch of these big players, that this is going to be the thing that only hyperscalers are going to be able to compete in, that whoever has the most infrastructure, even whoever has the most power, right? We've seen a big run up in nuclear stocks and things like that. And this sort of threw all that out the window, because if we're to believe what DeepSeek is saying, this was done with a much, much lighter weight, amount of usage of chips, and it actually is running a lot more efficiently. So that suggests, right, that this crazy run up we've seen in demand for GPUs and so on might be overheated. Now, we had other reasons to think that there was perhaps some sort of bubble or a little bit of frothiness in this market. And I do think if it hadn't been this, it might have been something else, right? I think investors were and are primed to see to see potential flaws and with the business model that so many have bought into.
So not necessarily an end of the AI spend, but just kind of a twist and turn in the story. And there's still more to be known, right, Max, in terms of the reliability of the information we're hearing from them and the reality of it.
Yeah, there's so much we don't know here. And again, it's definitely worth, I think, approaching DeepSeek's claims skeptically, and also understanding that if they were able to develop a much more inexpensive model, that could help parts of the AI market. It doesn't necessarily mean that all of this goes away or something, but it
maybe
does
make it more accessible, right?
Exactly.
If it's less expensive.
Yeah, it definitely, but it could cause investors to dramatically revalue some of their assumptions.
How does it change the narrative around what China is able to do when it comes to AI right now, and sort of the tech race that's happening there?
The thing is,
because they weren't supposed, these chips, a lot of these chips are not supposed to go to certain parts of the world.
Right. So there's something potentially troubling there if you're looking at the attempts to restrict certain U.S. technology to China. It seems like either those restrictions aren't working that well, maybe some GPUs found their way to China, or or that the Chinese software industry has found ways around it, which would also be potentially problematic, I suppose, from a sort of U.S. national security perspective, at least from the point of view of the China hawks who have been sort of warning about this, and that includes many of the Silicon Valley companies. Like, remember, one of the big reasons to justify this like massive spend on AI, and one of the reasons that many of these folks, including Sam Altman, sees this as a thing that government should be involved in, is because they have been arguing that without this, without spending huge sums of money on, say, on power or investing in infrastructure in terms of data centers, that we would fall behind the Chinese tech startups. And that may, you know, if you sort of extrapolate from this very small piece of news, you might say, okay, well, it's happening anyway. So that sort of throws everything into a bit of disarray.
All right, so let's get to Stargate. Love the name, love the name. Elon Musk. I find it interesting, I think we all found it interesting, that here's this big announcement, right, that comes out of the Trump administration last week, and Elon not so in on it, is he?
No, not in on it at all. You know, it wouldn't be surprising if you had this big announcement with Donald Trump and the CEOs of some major companies talking about huge numbers, right? They were saying we're going to invest $100 billion immediately, $500 billion within the next 4 years. Would not have been surprising if some people said this sounds like a political stunt. I'll believe it when I see it. It's just what made this thing that happened last week so surprising is that the person saying that was a senior advisor to Donald Trump. And it was Elon Musk tweeting over and over and over again last week. I mean, the last time I checked 20 times. He's tweeted a few more times. You know, the usual mix of, I'd say, off-color jokes and put-downs. You know, he's called Sam Altman, who was, of course, on stage with Donald Trump, a swindler. He suggested the announcement was fake. And Trump has sort of responded by saying, hey, you know, Elon Musk has a dispute with one of the people in this deal, which is true. Sam Altman and Elon Musk have been feuding more or less in public for the last couple of years. So we're sort of seeing, I'd say, you know, maybe one of the downsides to having somebody who is as deep in the business world also involved as a advisor to the president.
I mean, is Elon Musk at this point saying, hey, I gave you some giant bags of money to help you win the election?
What were you thinking?
And now you're doing this. Does this risk driving a wedge between the two of them?
I think for both Musk and Trump, I mean, there has been, over the last couple of months, people who have been on high alert for signs that this relationship might be breaking up. And I would say that it doesn't seem like this has done it either. You know, Trump has cracked jokes before. We've seen these tweets. There was a dispute over the H-1B visa thing. Both Musk and
maybe
Trump,
that led to the divorce between Ramaswamy and Musk.
Yeah, at least according to some reports. You know, it's possible there are other reasons as well. But what I'll say is it seems like Musk and Trump are still working closely together. I'd say Trump's comments about this, to me, suggested that he was untroubled by Musk's, you know, apparently kind of trying to undermine or undermine some of his partners in this deal. And I'd say part of that is that, you know, there's not necessarily government money going into this in the Stargate thing. It really was basically a media event for Donald Trump to announce a big business deal so that he can claim credit for you know, helping to spur the economy. It's kind of like a vibes thing. And I think because of that, I'm not sure it really hurts Trump all that much to see Elon Musk dissing Sam Altman on Twitter.
Well, you write in your story, Max, you said Musk has always treated his conflicts of interest like features rather than bugs, seeming to run his normally independent companies with their nominally independent shareholder bases as if they were a single conglomerate. You talk about employees being lent out, sharing of resources and stuff. So conflict, he's kind of all in on this too.
Well, yeah, absolutely. This is a big part of, first of all, competing in this area is a big part of Elon Musk's big plan for his companies. Not just Tesla, which of course is developing, you know, advanced robotics and is trying to build self-driving cars, but also XAI, his chatbot competitor. So he is very much playing in this market. He is also competing to buy these NVIDIA, these high-end NVIDIA GPUs. He's building giant data centers. So he very much has a dog in this fight, and that's why he's doing this. And I think Trump's attitude seems to be, That's all out in the open, as long as people understand that what's behind this is a business dispute. Again, he said, well, one of the things is he hates one of the guys in the deal, an obvious reference to Elon suing Sam Altman.
Said that too.
But then Trump said, I hate people too. So
we all have a problem child.
But I do wonder, what Donald Trump has been able to do in recent months has been pretty incredible when it comes to the tech industry. I mean, a week ago, Carol and I were sitting here looking at the stage during the inauguration, and you saw titans of industry who were not at previous inaugurations there, all collectively getting behind the president. I mean, he is this larger-than-life figure who perhaps can bring people together who don't like each other, maybe because he offers them something that they want.
Yeah, well, Trump, probably more so at least than former President Biden, approaches the presidency in a way that I think it would be fair to describe as a little bit more transactional, right? He's willing to bend his policies to make deals. It's the whole thing that he's about. And in certain ways, right, that works well for CEOs. I also think there's a lot going on there. There was a lot of built-up anger in Silicon Valley over some of Biden's policies, over antitrust, for instance, and you have a lot of opportunism right now. There's a sense that they have leverage because by showing up in these Trump things, they're giving Trump some additional credibility, and they're trying to use that to get what they can, which is favorable policies, favorable antitrust policies.
We're going to talk about that in the next couple of hours.
Hey, Max, I do want to go back to where we started and DeepSeek, because we're getting some breaking news. NVIDIA is out saying that DeepSeek is, quote, excellent AI advancement, and says that DeepSeek's work, quote, fully export control compliant, and says that inference requires significant numbers of its GPUs. This is in an email statement on the DeepSeek AI model. They're coming out and saying, or talking about it. I'm wondering how you view that.
I mean, I think it's, first of all, everybody's talking about it. It seems like they have to, and they also, I think, in that statement, again, I haven't looked at it, I'm just hearing it now, it seems like an attempt to address suggestions that perhaps DeepSeek had access to improper access to GPUs or something like that. It sounds like they are saying that, no, that's not the case. Again, it definitely seems like this would be a business challenge for NVIDIA. If you were able to do the kinds of chatbot work much more efficiently with about the same sort of level of quality, that's going to make these GPUs perhaps not as valuable. But again, there's a lot here that we don't know, and you also have seen people on the other side of this saying, actually, this is going to be great because it's going to make these chatbots so much cheaper. We're going to see tons of them. Essentially, we're going to make it up on volume. It's hard to know how to evaluate that when we don't know that much about how this was put together or really just how good the quality looks. People have been playing with it only for a short amount of time.
Wait, you want details? Silly you. Great stuff. Max, thank you so much. Bloomberg Business Week columnist Max Chafkin. He's also co-host of the Elon Inc. podcast. You can check that out. It's on the Bloomberg and also at Bloomberg.com/Elon Inc. Max is also author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. All right, Tim, we're definitely all in on tech today. We're continuing to see some selling, a lot of selling actually in the NASDAQ 100, although off our lows. Coming up, though, another big thing that's on the mind of investors this week.
Is it Jay Powell in the Fed?
Could be.
Okay.
Think he'll be asked about this?
I think he will be.
I think, and a few other things. That's next. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are declining, selling off on concern that cheap artificial intelligence from Chinese startup DeepSeek could make valuations of the technology that has powered the bull market tough to justify. Right now, we have got the S&P down 99 points, holding barely above 6,000, 6,002 right now on the S&P. It is down 1.6%. NASDAQ, meanwhile, down 646 points. The NASDAQ Composite Index is plunging 3.2%. The NASDAQ 100 Index also down by 3.2%. 10-year at 4.54%. The 2-year yielding 4.20%. Gold down 1.2%, $27.38 the ounce, and West Texas Intermediate crude down 2.1%, $73.09 a barrel. Bitcoin, meanwhile, down 4.6%, 99,720 now on Bitcoin. Today's DeepSeek news, which we are covering on Bloomberg Television and Radio, has put a spotlight on AI chip producer NVIDIA, whose shares have soared ninefold in the past 2 years. NVIDIA right now is plunging by 17.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here at Bloomberg headquarters in New York City. Hey, I gotta say, reading in this morning, Morgan Stanley continues to recommend that investors hold long 5-year treasuries ahead of 2 potentially dovish market catalysts. And those catalysts are the January Fed meeting, so not this week's meeting, and then this month's job report. Meantime, you've got JP Morgan staying along the front end of the Treasury curve, while BMO positioning for 2 quarter-point Fed cuts this year. So while we are focused so much, Tim, on tech and AI news this morning, let's not forget we get the first Fed decision of 2025, that decision out on Wednesday.
Okay, with more on that in the studio, we got Ian Wyatt, Senior Vice President, Director of Economics at Huntington Commercial Bank. It's a division of the publicly held, roughly $25 billion market cap Huntington Bank shares. Ian, good to see you. Look, before we jump into exactly what we're going to hear from Fed Chair Jay Powell, I would imagine he might get some questions around AI and the market sell-off this week. Whether or not he answers those questions, that certainly remains to be seen. I would figure out a way to ask him a question around that. How are you looking at what's happening in the market this week, especially ahead of this Fed meeting?
I think, well, first, I think in terms of the Fed meeting, not related to AI, I think our view is that there's still inflationary pressures out there in the economy. But I think it's really, we have this 2-speed labor market we're seeing. We're seeing is for lower end jobs, where's the job growth been? It's been restaurants, it's been hotels, it's been a lot of service areas. And when I talk to companies in those areas, whether you're manufacturing, transportation, still a tight labor market. They're having a hard time finding workers. If you're talking about more of a college job, professional and business services, where are we not getting job growth? IT obviously has been down. We've seen, them focusing on cash flow more than job growth. So we kind of have this 2-speed labor market where you still have a tight lower end. And the problem for inflation is a lot of those industries are very labor intensive. Childcare, for example. It's something where labor, or restaurants, labor makes up a huge percentage of your cost structure, and they're still feeling that pressure. So I think we've probably been on the low end of the Fed saying in terms of cuts for 12 months now.
Yeah.
Now I think we're more in line with the 2 cuts roughly this year. But I still think that pause holds for a while because I think there is that fundamental underlying inflationary pressure that is not really, when you tease out inflation, you look category by category, it's not been durable goods. Durable goods have been coming down, but it's also stuff that consumers can choose not to buy.
So Ian, I just want to stay with AI for a moment. That AI spend, the economic, activity it may impact on the up or downside. How does it, if at all, factor into any of your economic models when it comes to growth, when it comes to inflation, and then ultimately to Fed policy?
AI caused me to get one call really wrong last year. I thought construction employment was going to come down.
Yeah.
I thought, multifamilies coming down. We saw warehouse space is oversupplied. Now, obviously, office has its issues, and I underestimated how much it would be CHIPS Act. It would be the chip plants like Columbus, for example, where we're headquartered. They have that massive Intel plant, a couple of the largest cranes in the world operating there. And AI was a huge part of this, and I still think there's this huge first mover advantage. You don't want to be the last company. You want to be the last company that still gets a power connection versus the first where they say, no, we don't have enough juice. We can't afford, or we can't build, connect you for 5 years. And I think that case still remains.
Yeah.
I also think there's another bullish case for power that when you look at the forecast isn't really baked in very well.
What is that?
Well, transportation.
How so?
So, okay, if you look at U.S. energy consumption, roughly 15% of U.S. energy consumption is residential. That's what we always think of our power. 37% of U.S. energy consumption is transportation. Right now, over the last 6 months, roughly 10% of U.S. car sales we're up to have been plug-in vehicles. Now, vehicle fleet takes a long time to turn over in the U.S. Average vehicle age is over 12 years now. It takes a while, but as that starts to kick in, if you even get a small fraction of that 37% shifting from fossil fuels to electric power, it doesn't really matter the source, whether it's gas or solar or whatever, you have a very different outlook for electric demand in the U.S. And I think that also means utilities are going to have to build a ton of infrastructure.
Does that get derailed by the Trump administration pushing back against EV subsidies and trying to get people to move away from EVs?
I mean, I think it slows it to some degree. I think that's definitely, you're seeing a shift in administration policy. If you look at Germany, for example, when they cut their EV subsidies, that dramatically slowed EV sales. But it's still something where there's a lot of the global market is shifting in that direction. Autos are shifting that way.
China's all in.
China's all in. I mean, you talk to a friend of mine runs FedEx distribution, owns a couple FedEx distribution places, and he talks about, the gas prices on his delivery trucks. And he's really looking, how do I lower my fuel expenses? And that's really a perfect application for EVs. Short range, stop, start driving.
So does he do that with Rivians? Like what Amazon is doing?
Yeah, I mean, he's looking at
able
those.
to do that?
Yeah, he's looking. I mean, Rivian's just starting to sell beyond Amazon now. They're just moving beyond Amazon and filling those initial orders. Whether it's that or Ford and Stellantis both have products in that market as well.
Sorry, Carol, I know we were supposed to be talking about the Fed.
No, I kind of love this because it's a fuller picture of kind of the markets and really our economy. So having said that, I mean, I don't know, this January meeting, the decision on Wednesday, Ian, is it kind of a snoozer because we don't really expect anything, or is there a fine a fine needle that Jay Powell has to thread here in some ways?
I think thematically we've seen, a year ago when he did the Powell pivot, you felt like there was pushback right after he spoke at that presser, and it definitely seemed like he was on the dovish end of the spectrum. If you look back at the September vote on the dot plot, you can see almost half of Fed governors only wanted 3 cuts this fall. So that would mean essentially there should have been 125 in each meeting. And that meant they were opposed to 50 in September. Now, obviously, they all get on board. They all push in the same direction. But if you look at the minutes, you look at the notes, I think he's still, again, I think this is a repeat of about a year ago. He's on the dovish end of the spectrum. He has to get the board to come along with him. And I don't think I think the inflationary pressure is still there. I still think there's some underlying, and when I talk to companies in the economy, depending on the part of the labor market they're in, it's still there, it's still significant, and I think that helps some of the more hawkish voices on the Fed. We're the very narrowly balanced Fed, I think, on this.
So it's really labor costs that you're most concerned about. It's not the price of eggs that everybody keeps talking about. It's really labor costs.
Well, yeah, I mean, I'm the grocery shopper in the family, so I definitely noticed the price of eggs. And I used to work in Georgia, so I know, top egg economy, top egg producing state in the country is basically offline right now because of bird flu.
Right.
So there's some big things going on there. But no, I'm much more concerned about rent growth. I mean, that's a good sign we're seeing on the inflationary front. If you look at the market-based rent indexes, you can see you're at 1.5%. The problem is, 2/3 of Americans own their home. A lot of that's single family.
Yeah.
We're still seeing, and the implicit rent deflator from that comes from rents on single family, not multifamily, and that's still feeling pressure.
What did you want to say? I know I jumped in on you.
Oh, I wanted to just say NVIDIA's down 18%.
NVIDIA's down 18%.
I want to remind everybody that's the data we're looking at. Broadcom's down 18%. Oracle's down 17%. Alphabet down 4%.
No inflation there, right?
Yeah, that's the backdrop of today's
Some would say it's on sale, or maybe not, depending on the outlook. This was really fun. Come back soon.
Thank
Ian
you.
Wyatt, Senior Vice President and Director of Economics, loved where the economic conversation went over at Huntington Commercial Bank, joining us here, Tim, in studio.
Hey, coming up next, we shift to the White House and the firing of 17 independent watchdogs. What you need to know when we return. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody. Want to get to a story that we all kind of read probably early Saturday. It was in numerous reports. It was about a move that was actually late Friday night by President Trump, who fired 17 inspectors general at multiple federal agencies, according to folks in the know. We wanted to know more. We head to Washington, D.C. right now, and Bloomberg News team leader for the Capital Influence team, Mike Dorning. So, Mike, first of all, what do we know about what happened, and what have we heard from the White House?
The White House is, someone from the White House sent out an email Friday night that said, your services are no longer needed because of a change in priorities, and got rid of about, at least we know, more than a dozen, and I have heard 17 inspectors general at agencies throughout the government. President Trump was asked about this on Saturday. He said somewhat incorrectly, this is standard procedure. That's not really true. But the president does have the power to fire inspectors general. There is a difference between the legal route and the one Trump took, which is they're supposed to give 30 days advance notice and give a reason for it, and notify Congress of that reason 30 days in advance. And in this case, obviously they didn't.
Okay, don't tell my government 111 professor, but just remind everybody what inspectors general do.
Yes. So basically, the inspectors general are kind of an internal watchdog that a lot of federal agencies have. Most of them do. Some of them are actually confirmed by the United States Senate, and some of them are, just set up by the agencies. And they actually, there's a long tradition of this. It goes back, centuries of having internal inspectors to ferret out waste, fraud, abuse, corruption, mismanagement in government agencies, including around the world. And in the U.S., these inspectors general have sometimes they often put out reports about abuse and waste and corruption inside a government agency, but sometimes they're quite noteworthy and get a lot of attention.
Political appointments or no? And do they tend to stay through multiple administrations once appointed or confirmed?
They are appointed by, in some cases, the president and confirmed by the Senate. In other cases, by, the heads of the agencies. But they typically have stayed on from administration to administration. Now, I did learn in reading and about this over the last few days that President Reagan did dismiss the ones when he came into office and then appointed new inspectors general. So it's not completely unprecedented that a president has never fired the prior administration's inspectors general. The difference is there's been a law to require this advance notice now.
Mike, as you've been looking into this, what seemed to be, or what could be, an issue that the Trump administration would have with these inspectors general? Is it merely they're a holdover from the previous administration and they're looked at as political, even if they aren't necessarily political?
Well, one problem is these inspectors general can sometimes point out mismanagement by senior figures, people abusing perquisites of office, people having contracts with favored political friends. But I think what's probably most important here is President Trump is showing that he's the boss and that he's not going to let these little impediments get in the way, and showing the members of Congress that even if they have these requirements, he's not going to feel bound by it. And an important thing was that there were some Republican Congress senators who had some very tepid criticism of Trump, but there were also plenty who defended him, and he's basically not had a big political pushback from certainly any Republicans in Congress here. So it does sort of help assert his dominance and prove his dominance over Washington.
So since they are supposed to, as you said, they can be fired by the president, but they inform Congress. Have any Democrats come forward and said, wait, we've got some issues with this?
Yeah, definitely Democrats have come forward and said, hey, this leaves you vulnerable to more waste, fraud, and abuse, and it's an effort to prevent, independent watchdogs in government. And indeed, it will be Trump administration that will appoint the replacements.
Hey, Mike, just got about 30 seconds here. Are these kind of what some people might say, the guardrails around any administration, any president?
They are guardrails, and they sometimes have stopped or highlighted important corruption, but they're not one of the primary guardrails in American politics. You would think the primary guardrails in American politics are the courts, the Congress, and the independent media. And those are the ones that are set up by the Constitution, and those ones tend to be more powerful than inspectors general. But the inspectors general still have a role, and an important role.
All right. Really appreciate the perspective there. Mike Dorning, he's team leader for the Capital Influence team at Bloomberg News, joining us from our D.C. bureau. All right, that's going to do it for this hour of Bloomberg Business Week. For those watching on TV, the close is coming your way in just a moment. Tim, we continue, though, on Business Week.
Yeah, all in on DeepSeek and the way that it's upended tech stocks today. Gina Martin Adams joins us.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Matt Piper. It's day one for Defense Secretary Pete Hegseth.
Support of mass deportations in support of the president's objective. That is something the Defense Department absolutely will continue to do.
Besides that immigration enforcement, President Trump is expected to sign a host of executive orders focused on the military that Hegseth now oversees, including reinstating troops that were booted for refusing to get vaccinated for COVID. It's believed about 1,000 migrants were arrested by ICE over the weekend, from Miami to Chicago to the Bay Area.
ICE teams were spotted behind a Target store in San Jose and at a nearby home. Witnesses reported seeing federal agents in unmarked vehicles targeting specific individuals.
Shakeouts, I guess. They're kind of hidden and working around.
Timothy, a Target contractor, says he doesn't support ICE enforcement unless the agents are going after known criminals.
If it's help cleaning things up, then by all means. But if they're just trying to come out here and make a living, then I don't see anything wrong with that.
Matt Bigler for CBS News, San Jose, California.
We're learning that more than 300,000 displaced Palestinians have now returned to northern Gaza after Israel said it was okay to do so as part of a ceasefire deal. But our Ramy Inocencio, reporting from Tel Aviv, says many are returning to find their homes are gone.
Mostly rubble is what they're returning to, because we know that the IDF has been focused on northern Gaza in order to try to, in its own words, destroy Hamas.
Did you feel it in the Northeast? An earthquake centered off York Harbor, Maine, was felt more than an hour south in Boston. It was a magnitude 3.8. Nicole Pestana is Emergency Management Director in York.
This is pretty large for this area. We don't typically see something of this magnitude, but it's certainly not impossible, and this is a reminder of such.
Last year, a 4.8 quake centered in New Jersey was felt in parts of Massachusetts. Today marks 80 years since the liberation of the Auschwitz concentration camp. There's a memorial service in Poland, and 86-year-old Tova Friedman from New Jersey was one of the youngest survivors and says she remembers it like it was yesterday.
The cries and the prayers of so many desperate women permeated my soul and haunt me to this day.
He was first gentleman last week, but Doug Emhoff is heading back to corporate law. The husband of former Vice President Kamala Harris is joining the Wilkie Farr and Gallagher law firm in New York. A release from the company says he'll split his time between there and Los Angeles. Coke says it's adding Coca-Cola Orange Cream to its lineup, set to go on sale next month, sold in regular and zero sugar varieties. This is CBS News.
state-funded programs.
Are you keeping money secrets from your spouse or significant other? A new survey finds many are indeed committing financial infidelity. The story from CBS News reporter Christopher Cruz.
Maybe you have a bank account no one else knows about, or secret credit card balances or other debt, or you're keeping your spending hidden. Bankrate senior industry analyst Ted Rossman says that can undermine trust and harm your relationship.
Let's face it, it's hard enough to meet your financial goals when you're working together. It's so much harder when you're pulling in different directions.
The Bankrate survey finds about 1 in 4 American adults who are married or living with a partner say they've kept a financial secret from them. Rossman says even secret savings can be problematic. Christopher Cruz, CBS News.
And Bankrate says some couples use the yours, mine, and ours method of handling finances, which allows couples to make both individual and joint decisions about their money. Matt Piper, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are 55 minutes away from the closing bell on this Monday, January 27th. Carol Massar, Tim Stenovec live here in our Bloomberg Interactive Brokers studio. And yeah, we've got the NASDAQ 100 down about 3.5% here, just bouncing off its lows of the session. But that's where we're seeing most of the selling here today, is those tech names, particularly semiconductors.
Yeah, what I think is just so fascinating about this is you actually have more stocks higher today in the S&P 500 than lower.
Right.
You got 331 stocks higher, 170 lower. But the ones that are moving lower are the big players. I mean, you got NVIDIA down 17%. You got Broadcom down 17%. Microsoft down 2.4%, Alphabet down 4.4%, Oracle, Carol, down 16%. But on the other side, there's a lot of green on the screen.
Yeah, so we're going to try and make sense of it. We've got a great voice who's going to do that for us. Gina Martin-Adams, our Bloomberg Intelligence Chief Equity Strategist, joins us in just a moment. How this news out of DeepSeek and this talk of AI, how any of this maybe changes how we perhaps think about some of these big tech names.
Also, just back from Davos, we've got the CEO of the Americas at the consulting firm Wipro to give us an idea of what companies are doing to compete in this new AI world.
And then we're going to ask someone if he's buying the dip on this Monday or selling out of his positions. The co-portfolio manager of the TCW AI ETF, that's a lot of letters right there, joins us a little bit later on. So we've got a lot coming your way in the next 120 minutes.
Yeah, NVIDIA's biggest holding, more than 8% of their portfolio.
Think he's selling or is he buying?
That's what I'm going to ask him at 4:07 when he joins us today. All that and more coming up over the next 2 hours right here on Bloomberg Business Week. First up, though, a check of the trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much. And you guys set me up nicely because here's what's going on. Right to the numbers. NVIDIA now down 17.3%. You mentioned the divergence in markets. We've got the Dow up 140, up by just about 0.3%. Going to be talking to our Gina Martin-Adams about that. S&P right now down 115. Carol mentioned very close to the low of the day, down by 1.9%. NASDAQ now tumbling 714. That is a drop of 3.6%. Got to keep it locked into Bloomberg Radio to find out how things shake out at the close. 10-year 4.53%, with the 2-year 4.19%. Gold down $32 the ounce, down 1.1%, 27.38. West Texas Intermediate crude down 2.1%, 73.07 a barrel. And Bitcoin have been down as much as 5%. Right now it is down 4.7%, 99,660 on Bitcoin. As for the overall tech backdrop, Victoria Fernandez is Chief Market Strategist at Crossmark Global, and she was interviewed this morning on Bloomberg Television.
Obviously, the tech game can turn on a dime. We've seen it over the last 24 hours. I do think that the U.S. is probably still a little bit ahead in this race, in this tech race, because of all of the investment that we have put in there. But it looks like the story is China is not as far back as what people thought. They are much closer. So it leads to some questions, and obviously we see that response in the markets today.
Victoria Fernandez of Crossmark Global. Again, NVIDIA down 17.3%, the S&P down 1.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Really do appreciate it. As we've been covering all day, a rough start to the week on Wall Street. Tech stocks selling off on concern that a cheap AI model from the Chinese startup DeepSeek could make valuations of the tech that has powered the bull market tough to justify. We heard the numbers from Charlie Pellet there, worth repeating. The NASDAQ 100 right now down about 3.4%. Gina Martin-Adams is Bloomberg Intelligence Chief Equity Strategist. She joins us here in the Bloomberg Interactive Brokers studio. You and the team out with a note today that tech remains one of the biggest risks to the outlook for the S&P 500 this year. And we're certainly seeing that play out right now. But this is not something you just started talking about today.
No.
You've been telling us this for a while.
No.
You've been reminding us this for a while.
I would be very remiss in my job if I just suddenly came up with this idea.
Gina up all night as she sees futures, just banging out this note.
Exactly, but thank you for that. Yeah, we actually first started seeing a little bit of loss of momentum in tech, triggering some, and it's an earnings momentum loss, triggering some rotation in our sector models back in June of last year. So this has been an ongoing sort of process for us where valuations are just so extreme. And when valuations are so extreme in an environment where earnings momentum is decelerating, you're prone to risks and prone to just bullets piercing the armor, if you will, right? And this just became that sector over the course of the last 6 months, and we think that's probably going to characterize a lot of 2025 for tech, is a lot of give and take as we really question some assumptions that are embedded in prices.
So was it just a matter of time, like something that made
Something was
people,
going to
if
give.
not this, it would have been
Yeah.
something else?
And we started to see it a little bit, Carol. Last year, tech really made its ultimate peak relative to the S&P 500 for most tech names back in last summer. And it's been trading in fits and starts. You get some rips, but you also get quite a bit of dips in the tech sector. And that's because we've started to see some chinks in the earnings armor. Again, it really is about this decelerating profits growth and the companies themselves saying to us, well, look, maybe expectations are a little bit high for margins in particular. We heard a lot of margin chatter over the last two earnings
You've been saying
seasons.
watch
They just
margins.
can't quite satisfy expectations. It doesn't mean that they're not growing earnings very, very quickly, right? We're seeing very strong earnings